Hello, good morning, everybody. Am I audible? Hello?
Yes, sir.
Yes, sir. Yes, sir. You are audible.
Is Mayuresh there? Mayuresh?
No, not yet.
Okay. Fine. ठीक है. ठीक है. Mitali, who is in contact with Mayuresh?
Yes, sir. Mayuresh has joined, sir. Mayuresh has joined. Yes.
I'm not seeing that.
Just another 2-3 minutes, sir. We will start. Mayuresh, hello.
Yes, ma'am.
Yeah. Just another 2-3 minutes.
Mayuresh, good morning.
Good morning, sir.
Good morning. Mayuresh, what is that name of the girl? Jamdar or Jamadar?
Zamadar.
Okay, I'll check mail today because she has messaged me yesterday, but yesterday
Okay.
I was very busy. Yeah. Oh, sorry, it is live streaming. Okay, fine.
Okay.
Okay. Backdrop. हाँ. क्या करना है? Backdrop डालना है. तो मैं एक ही मिला है मुझे. Backdrop क्या? ये नहीं है ना मेरे पास. नहीं आपके पीछे backdrop चाहिए. ठीक है इसको.
A very good morning to one and all present here. On behalf of Parle Tilak Vidyalaya Association's M.L.Dahanukar College of Commerce, I, Ms. Rohini Madavi, Assistant Professor from Department of Commerce and co-convener of this conference, welcome you all to this one-day online multidisciplinary international conference titled Forging the World for Transition Towards the New Normal. This e-conference is jointly organized by Internal Quality Assurance Cell and Department of Bachelor of Management Studies and BCom Banking and Insurance Department of PTVA's M.L.Dahanukar College of Commerce. Before we begin with the conference, I would like to give some general guidelines. If you have any questions, kindly type in the chat box. All these questions would be definitely taken up by the resource person towards the end of the session. Also, please ensure that you fill the feedback form which will be circulated at the end of the session. Pandemics and other global crises have affected the business, enterprises, and each and every sector in the world. However, the damage made by the global crisis could be mitigated or averted by developing such innovative business and entrepreneurial models that would help evolving perseverance and resilience through robust business ecosystem. So, keeping in view this critical situation with the inspirational word and support of our beloved principal, Dr. D.M.Dahanukar, we have organized this one-day online multidisciplinary international conference titled Forging the World for Transition Towards the New Normal, which will help to have a common platform for academicians, researchers, students, industry personnel, and all those who are willing to take the challenge of the uncertainty of the future in offing head on the strive to create dynamic models of business. May I now call upon the convener of the conference, Dr. Mitali Shrilankar, to speak a few words. Over to you, madam.
Thank you, Rohini ma'am. A very good morning to all the distinguished guests, ladies and gentlemen. A very warm and a hearty welcome to one and all. I, Dr. Mitali Shrilankar, coordinator of the Bachelor of Management Studies Department and BCom Banking and Insurance Department of M.L.Dahanukar College of Commerce, feels extremely glad to welcome each and every one of you to this much awaited one-day online multidisciplinary international conference titled Forging the World for the Transition Towards the New Normal. The ancient Indian shlokas has rightly remarked, Parivartana meva sthiram asti, which means the only constant is change. This statement portrays that change is all around us. Life and everything in it is always subjected to change and transformation. As we all know that the world has seen an unprecedented onslaught of COVID-19, which has brought about an unthinkable shift in all spheres of life. Learning to adapt to these changes in the wake of these turbulent times is the key to one's well-being. This process of learning, unlearning, and relearning is what makes life meaningful. This, in a way, also encapsulates the theme of our one-day online multidisciplinary international conference on forging the world for the transition towards the new normal. As I reflect back on the planning process of the conference, I express my deepest and heartfelt thanks to our parent body, Palatilak Vidyalaya Association, for their sustained support. I'm extremely thankful to our principal, Dr. D.M. Doke, and vice principal and IQAC coordinator, Srimati Chandana Chakraborty, for their constant motivation and guidance throughout the process. The entire journey was truly an enriching experience. As we look back, 11th of March 2020 marked the beginning when the World Health Organization formally declared the COVID-19 pandemic, underscoring the precipitous global uncertainty that plunged the lives of millions into an unfolding crisis. The daily reports of the outbreak casted a very big question on the social life. Never in the modern history, the countries had asked the citizens to stay home, curb travel, and maintain physical distance in such large proportion. This unprecedented reality also witnessed the commencement of the dramatic new restructuring of the social and economic order, marking the emergence of what we call it as a new normal. The COVID-19 pandemic has also caused a global change in the way of the living. As we move towards the reopening, a whirlwind of change and transition awaits the industry and academia once again. The transformation of conventionally flipped classes into fully online flipped classes with the help of cloud-based video conferencing app was in itself a new learning experience for the entire teaching fraternity. The plurality of experts have witnessed a sweeping change in the industry through technology driven practices and remote learning, presenting even more bigger challenges. This takes us back to the theme of our conference, forging, that's preparing the globe for the change, from resolution mechanisms to harder resilience, and now to reimagination and a successful return. To bring this vision into reality, today we have experts from different fields like finance, marketing, and corporate social responsibility. Corporate scholarly insights of such eminent personalities will surely give us hope, direction, and prepare us with the additional challenges thrown by this unprecedented situation. I am certain that with their vast experience and knowledge, our audience, both the learners and professionals, would definitely have a substantial take home as a learning outcome. As we move ahead, now I would like to call upon our principal and a great source of inspiration, the captain of our ship, Dr. D.M. Doke, to deliver the welcome address. Over to you, Doke, sir.
Good morning. Good morning, Mayuresh. We are very proud that our own student Mayuresh Dharap, and we are always proud of Mayuresh, is with us on speaking new normal. Every phase is changing after COVID. Even we never imagined that we will have conferences online, teaching, learning online. And now in the National New Education Policy, even there is an emphasis on hybrid mode. Not necessary for all the classes and all the lectures, teachers, students should come to the class. There are provisions of having online classes or some online already have video lectures and student can learn from the video lectures. So these are the changes that even in education we are going through. Of course, education is the last thing to change. Actually, the changes should come to education on priority basis. But unfortunately, in our system, whatever changes comes in the system, education is the last recipient of the changes or last respondent as against industry. And we are more eager to listen from Mayuresh. What are the changes he expects? He being in the insurance industry, drastic changes are being seen in insurance industry or even for that matter, medical industry. So I'm not going to take much time. I would just like to thank all the working committee, Mitali Shelankar and her team under the guidance of Chandana Chakravarti for making this conference successful, because there is a lot of pressure. A conference was going on each and every corner. So getting research paper, getting participants sometimes is difficult. But they have a good number of participation, good number of research papers. So I congratulate to all entire team and all the best. Thank you. Over to you, Mitali.
Thank you, sir. Thank you for your inspiring words as always. Now, as we move ahead and get ourselves, I would now request Rohini Madavi madam to introduce the keynote speaker for the day. Over to you, Rohini ma'am.
Thank you, ma'am. Success is no accident. It is hard work, perseverance, studying, sacrifice, and most is something that you love. Our keynote speaker, Mr. Mayuresh Dharap, holds true to this proverb. Mr. Mayuresh Dharap is the alumni of our college, so is one of the very few fully qualified actuary of India. He's a chartered accountant, CS and CMA. Mr. Mayuresh is currently associated with Star Union Daiichi Life Insurance Company Limited as a senior manager. Mr. Mayuresh has passed all 15 papers of actuarial science from the Institute of Actuaries of India. He is a chartered accountant from the Institute of Chartered Account of India. He has secured All India rank 8 in CA-CPT, rank 3rd in CA Inter, and rank 4th in CA Final. He is also a company secretary from Institute of our Company Secretaries of India. Mr. Mayuresh is also a CMA from the Institute of Cost Accountant of India, where he secured All India rank 1st in CMA Foundation and Intermediate, and All India rank 2nd in CMA Final. Mr. Mayuresh has done BCom from University of Mumbai, where he secured 1st rank. He's also received SV Gatalia Gold Medal for securing highest marks in the subject of financial accounting and auditing at TY BCom examination. Sir, it is indeed our honor to have you amongst us. I welcome you, sir, and request you to take over the session. Over to you, sir.
Thank you, Rohini ma'am, for such a warm introduction. Thank you for your kind words. Again, I'm thanking Principal Dr. Doke sir, Vice Principal ma'am, Chakraborty ma'am, the entire team led by Dr. Mitali for giving me this opportunity to present the keynote address today. As Mitali ma'am mentioned in her introduction that it's a new learning for us. Such pandemics, such crisis situations, help us to increase our learning. It makes us more humble. That means I'm an actuary by profession, and the very task of an actuary is to make sense of the future, is to take a view on the future. But none of the members from the fraternity could expect that we would have such a pandemic which would have devastating consequences and which would change the way things work. So we can never claim that we know it all, but we can humbly say that we learn it all. We learn through events like these and get ourselves prepared for the future. So I'll be taking you through the major impact of this pandemic on the insurance industry, both life as well as non-life. I'll just share my screen. Let me know once it's visible. Can you see my screen?
Yeah, it's visible.
Yes, it is.
Yes, it's visible.
Thank you. I'm sorry, there was a technical issue. Yeah. Can you see my screen now?
Yes.
Yes, we can.
Yes.
Okay. So the subject for the keynote address is reshaping the Indian insurance industry in tune with the new normal. Now, as we discussed that we have had this COVID-19 pandemic exactly 2 years back, as Mitali ma'am mentioned, being declared by the WHO on 11th March 2020 as a pandemic. Now, you know that the pandemic affected all the sectors in the global economy as well as the Indian economy, majorly the informal sector, because the government of India, given the unprecedented situation, unprecedented crisis, decided to give more importance to lives than livelihoods, which was a tough decision, but a decision necessary at that time, and that led to a nationwide lockdown, quarantine, work from home, as you know, and it had an adverse impact on majorly all the sectors, especially the informal sectors, the MSMEs, excluding agriculture, which continued to thrive even during the pandemic. All other sectors, informal sector, the tourism sector, hospitality sector, aviation sector, real estate sector, all other sectors experienced the impact of the pandemic. The impact of the pandemic was also experienced on the financial services sector, majorly banking and insurance. So in the banking sector, uh, you know, uh, there were credit losses because as far as the advances which banks had made, the borrowers were not able to pay on time. Similarly, in the insurance sector, there were increase in the mortality claims and increase in the health insurance claims, which gave rise to mortality losses, morbidity losses. And because of these losses, both banks as well as insurance companies were in need of capital. So there were capital infusions in the financial services sector. So we'll first try to understand that how this pandemic affected the insurance sector. Now, largely insurance comprises, I would like, while, I'm not only going to deal with life insurance, I'm going to deal with all types of insurance, life insurance as well as non-life. And it also includes health. Life is life insurance wherein you insure, it's a protection for in case if a person dies, the family is protected. And non-life includes all forms of insurance like travel insurance, motor insurance, property and casualty, cyber insurance, climate risks insurance, etc. And health insurance is, the best known example of health insurance is a Mediclaim policy, but health insurance is something which can be sold by non-life companies also and by life companies also. Life companies basically are experts in selling long-term products, and these products are fixed benefit products. The sum assured in case of life insurance is fixed, whereas non-life companies, they are, non-life policies are for a short duration. For example, your motor vehicle insurance is for a short duration of 1 year, which can be renewed in the next year. And the amount of benefit that you'll get under a non-life policy is not fixed, it's variable. So health is something which lies between the two. If it's a Mediclaim policy which reimburses your hospitalization expenses, that is ideally, it falls under a non-life kind of a setup. Whereas if it's a fixed benefit health policy, like a critical illness policy, wherein certain critical illnesses like cancer, kidney diseases, etc. are covered, and you get a fixed sum irrespective of the hospitalization expenses. So these such kind of critical illness policies can also be sold by life companies. So I'm just making a clear distinction at the outset that in India currently we have life companies who can deal only in fixed benefit products and fixed benefit health products, and we have non-life companies which can deal in health insurance, Mediclaim, critical illness, and which can deal in other forms of non-life insurance like motor insurance, fire insurance, cyber insurance, all other kinds of insurance. And we also have standalone health companies which only deal in health policies like Star Health. So how did the pandemic affect each of these sectors? In the life insurance, the obvious thing was that we had a huge increase in the mortality claims. It was unprecedented, more than 40% as compared to the previous years. But the welcome thing was that, there was a change in the consciousness of the population. Currently, if you talk in terms of the young population, before the pandemic, they were thinking about insurance as a luxury, because the general notion is that you are not going to benefit out of the life insurance proceeds that you will get in the case of your death. It will be someone else who will benefit out of it. But then, death is something which is certain, but the timing of death is uncertain. And, if you die at the wrong time, and if you are dependable, if you have a family to look after, then they will suffer from a financial trauma. Apart from the emotional, psychological trauma, which is inevitable, they will also suffer from a financial trauma if you are not insured, if you don't have a protection cover. So there was a change in the thinking, the mindset of the people, which, because of the pandemic, who actually, wherein we witnessed that young people also fell prey to it and they died. So there was a shift from looking at insurance as an investment option to the pure risk aspect of insurance, which is term insurance, which protects families in case of the death of the earning member. So there was a shift in the consciousness of the population. This was a welcome change, and this was reflected in increase in business volumes. Business volumes have in the last year have grown by around 10%. FY 21-22 in the previous year, they've grown by 7% as compared to the this is the premium growth. As far as the health insurance sector is concerned, again, the need for health insurance, the need for having a mediclaim policy, that was also critical. That was understood by the population, and we saw specific pandemic specific policies like Corona Kavach and Corona Rakshak being launched. Corona Rakshak was a policy which was a fixed sum assured critical illness policy, and Corona Kavach was a mediclaim policy. Corona Kavach was a floater policy. You could cover yourself and your entire family. So it was like a Kavach for your entire family. And in the context of non-life insurance, primarily, we saw an increase in cyber insurance premiums. The cyber insurance market has seen a CAGR of roughly 35%, and it is expected to grow even beyond 50%. The reason being that since there was a pandemic and since we were locked down in our homes, we were working from home, there was an increase in the digital presence. There was an increase in the number of digital assets. And so the need for insuring these digital assets was felt, which led to increase in the cyber insurance premiums, which is further expected to grow. The ideal ratio is that whatever is the value of your assets, the value should be at least in between 50 to 100 times of the cyber insurance premiums that you pay. So still, we are still very low on this. We will continue to grow in this. And similarly, during that time, since we were locked down, the sale of motor vehicles and the use of motor vehicles went down, and there was a reduction in the motor claims and temporary reduction in the motor insurance premiums that time, for the simple reason that they were not being used. And secondly, that since the motor vehicle sale had gone down that time, the regulator which had made third-party liability insurance mandatory. That means, in case when you buy a new vehicle, then you have to buy a third-party liability insurance. That means if there is an accident and if there is a damage caused to a third party, then the insurance company will reimburse the damage. So such kind of third-party liability policies are compulsory in case of motor insurance. But since the sale of motor vehicles went down, the regulator relaxed this, and because of this, the demand for motor insurance further reduced. Now, let us discuss what is the new normal first. Now, to give a brief definition of the new normal, it is basically you have a status quo, the current situation, then there is a crisis situation which you have to face. And if because of the crisis situation, the status quo is changed in a way that there is no possibility of returning to the original situation, then we call it a new normal. So there were some things which happened in the short term, which included increased deaths and hospitalizations, general uncertainty about life, work from home, lockdowns and quarantines, social distancing, etc. So this was, a year back or 2 years back, probably we would have felt that probably this is the new normal. But today we don't experience any of these. So this was something which happened in the short term. And of course, at that time we had to deal with it. We had to resolve that crisis situation. But it led to something it led to some changes in the long term, which will be there with us in the future. So it paved the way for certain changes which will define the future. So what are these changes? If we look at increased hospitalizations and deaths, there was a change in the perception regarding insurance. So as I told you, that there was a shift from looking at insurance as an investment option to looking at it as a protection option, the main core purpose that it serves. Increased uncertainty about life in general, it led to increase in the demand for insurance, both term insurance policies as well as health insurance policies. Work from home and lockdown ensured that there was a secular shift to the digital mode of delivery and increase in the number of digital assets. So this digital transformation in the insurance sector was long pending. There was a joke which was circulated on WhatsApp that time, that who is responsible for the digital transformation of your company, whether it's the CEO or the chief technology officer or the COVID-19 pandemic. And the answer was the COVID-19 pandemic, which actually led to a digital transformation. So it was not a proactive change, but a reactive change. But nevertheless, we saw this kind of digital transformation. And further, because of the social distancing, we got into the concept of completely contactless selling, where there is no physical contact between the selling intermediary and the potential policyholder. Now, I'm going to deal with a 5R model. It is taken from a report by McKinsey. This 5R model is a model which is recommended to address this new normal, how to address the crisis. The first 3 R's, which you can see in this slide, are related to the short term, and the last 2 R's are related to the long term. So initially, the first step is resolve. That means you have a crisis situation at hand. How do you deal with the crisis situation? Basically, the immediate crisis was, how do I manage customers? How do I reinsure them? How do I how do I communicate with them? How do I ensure that I have constant communication with them? Similarly, was the case with my employees, not only in insurance but in all sectors, wherein employees were working from home and the human element was missing. So how do I ensure that there is informal interaction between the employees through employee connect programs, through mental health initiatives, because mental health was also at stake. So this was dealing with the crisis situation. So after that, something was required was resilience, which means keep going in the face of adversity. So the immediate thing which insurance companies had to deal with was claim management, because you could not stop, because it was a COVID situation. There was increase in the number of claims. So you had to, and there was a lockdown in the country. So you had to ensure that the claims management process is being shifted to online. That was the immediate concern to keep going on in the adversity. And secondly, you had to optimize costs, because the mortality costs were a major concern. Because there was a lockdown, the sales had got adversely affected, especially in the first quarter of financial year 2021. So how do you optimize costs? That was a major concern for insurance companies. Later on, when the pandemic actually happened, the first and the second wave, the next phase was the phase of the return, when we get back to the usual activities. Now, when we get back, we must learn our lessons from the pandemic, and hence that led to complete digitization of the entire operations of an insurance company, including issuance of policies, underwriting processes, wherein you assess the risk, customer servicing, claims management. Entirely, it was made online. And similarly, there was one important aspect which I mentioned earlier, that there was a capital crunch in the insurance sector, like banking. Generally, if you see, insurance is a very capital intensive business, especially life insurance, because if you get 100 rupees of premium, you have to spend on commission to the distributor, you have to spend on the initial expenses, underwriting expenses, you have to set up reserves, mathematical reserves, in order to fund future claims, because your premiums are level premiums, and the benefits which are paid are will be towards the end. So you have to set up reserves. So if I get a premium of 100, I have to spend on commission expenses, setting up reserves, wherein I may have to spend 110 rupees. So when I get a premium of 100 rupees, at the outset, I create a strain of 10 rupees, which has to be funded by the shareholder. That means I should be having sufficient capital to bear this strain of 10 rupees. So in this situation, where already I was facing mortality losses and already my capital position was at stake, there was a need to make changes in the product mix in such a way that I'm selling lower, products which require lower capital. So, less capital intensive products. Similarly, if resources were not available with you and still you have to cater to the needs of the policyholders, you needed additional resources. So many insurers in the life insurance industry went ahead with issue of subordinated debt, which is a solvency friendly debt, which can be counted as an asset and which can be used for your funding needs, but it is not counted as a liability for the first 5 years for the purpose of solvency. So it helps in increasing your solvency. So there was capital infusion in the sector while returning to the normal activities. And then when we look at the long term, we had reimagination. So we were redefining existing ideas. We went to new product designs. For example, more focus on term products. Similarly, in the health insurance space, we had something called wellness products, wherein you encourage wellness and good health by linking wellness with the premiums that you pay on your health insurance policy. So, for example, you'll have a wearable device and you'll count the number of steps that you do. And if you do, say, a minimum number of steps, say 10,000 in a day, I'm giving you an example. So then you will get some discounts in your future renewal premiums. So I by enforcing good health among the population, among the insured population, the insurance companies thereby reduce their cost of insurance, the risk, and the benefits that they get out of the reduced risk are passed on to the customers in the form of lower premiums or premium discounts. Similarly, we had new distribution channels. There was a rise in the digital channel, completely virtual sales offices where end to end it was digital. Similarly, the traditional channels like bank assurance or agency, individual agency, they also shifted to the online mode. For example, nowadays it's very unlikely that we'll fill a physical form and give it to the agent. They will take details from us and they will have the insurance company will have its own application, a mobile-based application, or and in that application you can put the details of the policyholder and the policy will be issued to you. So there was a reimagination in terms of the product designs and the distribution channels. And finally, reform, which is happening to some extent and which will happen in the future. So something like inorganic growth. As I told you at the outset that we have life companies separate and non-life companies separate till now. But the finance ministry is mooting, it's thinking over whether we can issue composite licenses wherein a single company can also deal with life as well as non-life products. So basically there are 4 government general insurance, non-life insurers, which will be merged with LIC. That is, and LIC will be issued a non-life license. So this kind of inorganic growth will be possible. There is also a possibility that insurance companies will be allowed to deal in non-insurance products. That is also being thought of at the finance ministry level. So such kind of inorganic growth. Similarly, mergers and acquisitions. We saw mergers and acquisitions in the Indian industry, mainly in the life insurance industry. We had the merger of Exide Life with HDFC Life. We had the merger in the general insurance industry. We had the merger of Bharti AXA General with ICICI Lombard. And if you remember that the recent times we have listing of the largest insurance company and the largest corporate in India, LIC got listed. And apart from that, there are two companies in the pipeline wherein India First Life Insurance is going to get listed. It has got in principle approval from the regulator for listing. And similarly, we have a new age non-life insurance company, Go Digit, which is also going to get listed. So this was about the 5R model to deal with the new normal. Now, a very key feature of this digital transformation was something called InsurTech. Now, you must have come across the term FinTech. That means using technology to innovate your financial products and financial solutions that you offer to your customers. So on the same lines, InsurTech is using technology to innovate and to provide efficient insurance solutions to my customers. So they are basically based on emerging technologies. Now, what are these emerging technologies? We'll be dealing with it in detail in the coming slides. It includes artificial intelligence, machine learning, cloud computing, blockchain, etc. So these emerging technologies are the basis of InsurTech. Now, the 2 main pillars of InsurTech are increased digitization, increasing your digital presence. And because you're using these new technologies, you can cater in a better way to your customers. So that leads to increased customization or increased personalization. So what all are the benefits of InsurTech? The first one being contactless digital solutions. As I told you, right from policy issuance up to claims, everything is contactless. So in fact, you can take the example of motor insurance, wherein earlier in case of motor insurance, if you have a motor accident, then you had to call the insurance surveyor, he would come, then he would assess, would determine the amount of compensation, and then the claim processing would start. But now, you can just take photos of the the vehicle, the accident which has happened, send it to the insurance company. There'll be experts at the insurance company's end, who will assess the amount of loss based on these photos, and the claim processing will happen. In fact, this process, which still involves experts, using image processing technology, using AI, this also can be automated, and with limited human intervention, this can help in contactless settlement of motor insurance claims, changing the way things are. Similarly, end-to-end customized digital products. So selling more personalized digital products, which offer personalized solutions for the customers. An example of this, again, in the context of motor insurance, would be that earlier, earlier you had to pay a motor insurance premium for, say, a period of 1 year, and this was irrespective of the usage of your motor vehicle. So suppose if it's a pandemic, or if it's a lockdown, or if you are working from home, you'll not be using your vehicle 365 days a year. You'll be using it maybe 30 days or 40 days in a year. But then still, since you're using it for a limited number of days, your risk to the insurance company is limited, but still you are paying the full year insurance premium. So this changed. So there'll be a device set up on your motor vehicle, and it will be pay as you use. So to the extent of the number of days you have used, you will be charged premium accordingly. So this was a great innovation wherein I'm customizing my products. Improved communication with customers. Your chatbots, which is again an AI application, so that a proper balance between men and machines. So you have a chatbot which completely replicates human intelligence, and he can deal in real time with the customers, with the customer queries, and it will be available 24/7. Similarly, we have flexible premium models, the example which I gave you regarding motor insurance. So I don't have to pay a fixed premium based on my usage. My premium will be flexible. The earlier model in insurance, particularly like other industries, is cost plus margin model, wherein I determine the cost based on my previous experience using my own probability models. And on this cost, I add my margins and I determine the premium. But this is a one size fits all approach. Now, since we have since we can resort to these new emerging technologies, we can definitely go ahead, instead of going for this one size fits all approach, we can customize the premium. So there will be a flexible premium model wherein your premium would be based on the extent you use your motor vehicle. Similarly, we had something called bite-sized insurance products. So it is called as toffee insurance. So very small things, very niche things which are insured. For example, it could be pet insurance, insuring your pet. It could be mobile insurance. It could be things like that, which are coming up with differentiated products to ensure that you consider all the small bite-sized insurance products. So going ahead, these are some of the used cases in the Indian industry. This is in the Indian industry for the insurtech players who are currently there in the industry. The one which you already know is Policy Bazaar, which is a web aggregator wherein you can compare the various insurance policies of the various insurers available in the industry and then choose the best one. Apart from Policy Bazaar, we have Go Digit, as I told you, which is getting listed, which makes use of social media like Facebook, Twitter, Instagram, which allows you to make insurance premium payments using UPI and using Paytm wallets, etc. Similarly, you have Plum Insurance, which basically insures startups and small and medium enterprises. We have Acco, which is a non-life insurance company, which is known for 100% digital issuance of policies. It is known for 100% cashless in case of health insurance. And since it is completely on the digital platform, it doesn't charge any commission because there are no distribution costs. So, no conventional distribution costs. So it offers these benefits of lower distribution costs in the form of lower premiums. We have coverfox.com, which covers digital assets, cyber insurance. We have Toffee Insurance, as I mentioned, which includes bite-sized insurance like insuring your mobile phones, pet insurance, cycle insurance, electric vehicle insurance, so on. And we have One Assist. Again, One Assist is a specialized entity in mobile insurance. So these were some of the used cases for InsurTech in India. Now we'll quickly go through the various emerging technologies in the insurance sector, which I'll be giving you the basic gist of what the technology does, and then I'll be trying to explain how it has been employed by narrating a used case majorly from a foreign country. We can try to implement it in India, but this has been implemented worldwide. The first is cloud computing, which many of you must be aware of. That means the way we don't store electricity or don't store water at our home, but we get access to electricity and get access to water, and we pay for getting this access. Similarly, for using computing resources like servers, storage devices, applications, etc., we will not own those computing resources on site, but we will get access to these computing resources, and we'll pay based on pay as you use model. So there's multifarious applications in non-insurance sectors as well, including hosting of applications, customer relationship management, marketing campaigns, storage, etc. Now, this cloud computing is important when you have to deal with big amount of data. So the classic example of this is a credit guarantee insurance in the case of e-commerce. So you have e-commerce companies and they have their own inventory, and that inventory, any inventory entails a cost. So you have to go for a trade credit to finance your inventory. But especially in the context of e-commerce, the levels of the inventory are constantly fluctuating based on the demand. Because your demand is fluctuating, your inventory is fluctuating. And so, in the event that suppose if the demand falls down, you have a huge inventory pile up, then you will have to pay for the trade credit. So the insurance companies will insure you against such an event, wherein they'll pay to your supplier. So this is credit guarantee insurance in the context of e-commerce, wherein the data regarding the customer behaviors is tracked on a real-time basis. So it involves a lot of data, and hence cloud computing is used in that context. Now you have big data. Big data is data which cannot be captured, managed, and processed by conventional software tools within an acceptable time frame. So with big data, with huge amount of data, you can do a detailed analysis, do cross-selling to your existing customers, understand the various behaviors of customers, and ensure that you have more accurate actual pricing. Now, a classic example of big data is return shipping insurance. You must be aware that whenever we buy with any e-commerce platform, on any e-commerce platform, say Amazon, in case if we want to return the product, then beyond a point, the return shipment charges are deducted from the refund that we get. Suppose if you buy a product and then you have to return it, then while you get the refund for the product, the Amazon will charge for the return shipment charges. So in China, this model was introduced, wherein this return shipping charge is a very small, it's a bite-sized thing, it's a very small amount, but then it became a success. The return shipment insurance is basically insuring this in the event of return. But for understanding, in which case the return would be triggered, I would have to continuously understand and keep a track of the customer behavior, the web browsing data, etc., which is a huge amount of data for which I'll use big data. Now, we have AI, artificial intelligence, which is wherein I make machines learn, and I help them to replicate human intelligence. So basically, machines will be replicating human intelligence, but the limitations that humans have, humans have mood swings, they are tired. These limitations are not applicable to machines. They can deal 24/7. But again, there are certain limitations with machines as well. The core human values like sensitivity, integrity, empathy, machines cannot replicate that. So going forward, we should have a correct combination of men and machines. We should use AI, we should leverage AI to the extent possible, but at the same time, there should be a human touch. So the basic example of AI which is used across sectors, especially in insurance companies, is chatbots, which deal with the customers 24/7. But then, there could be some questions which the chatbots cannot answer. So in this case, you should have a backend team of actual human beings, wherein if the chatbot cannot answer it, then the question flags at the backend, and the backend team should be able to answer it, and that should also parallelly work. So that's what I said. It should be a combination of men and machines. Now, an important example of AI, which you must have read in the newspaper, which was launched in November 22 last year, and it has become famous now, is ChatGPT. It's an open source AI tool available, wherein you can pose any question to this ChatGPT AI tool. It's free. Currently, it's free, although you can go for a priced access. So you can pose any question to the ChatGPT tool and you'll get an answer. So suppose if you have a problem with the code debugging, if you're an IT professional, you can pose it to the system, to the ChatGPT tool, and then it will give you an answer. It can be anything. It can be anything from code debugging to composing poetry to writing essays for students to writing answers in an exam. So if it's an online exam, I mean, we should stop having online exams after this, because if it's an online exam which is not monitored, ChatGPT will play an important role there, because you can just throw a question to ChatGPT and it will give you an answer. And since it's an AI tool, there will be no issue of plagiarism also here. So, for example, you have softwares which detect plagiarism. So if you've copied something from a text, then you can understand that this is copied, and there are many institutes which debar such papers. In case if you want to quote something from a text, then you'll have to put it into quotes. But then if you use ChatGPT will, if 10 people pose the same question which is asked in a test to a ChatGPT tool, it'll paraphrase the answers for the question differently for those 10 people. So it cannot be a case of copy also. So this is a very key thing that we need to take into mind while going ahead with online exams, especially in the education sector, because it has received popularity in the coming 2-3 months. So we have to be thoughtful about this. Now we have the concept of blockchain, the technology of blockchain, which is very popular in the cryptocurrency, crypto assets. But apart from cryptocurrency, it is also used in insurance, wherein blockchain is basically where you ensure point-to-point transmission in a safe manner, wherein there are encryption algorithms. You encrypt the data and it's a safe transmission from point to point, and there is a distributed or a decentralized data storage. So the classic example of this is Fizzy, which is an airline delay compensation insurance. So suppose if you have booked an airline ticket and there is a delay in the flight, then after 2 hours of delay, by itself, the Fizzy's portal gets access to the Ethereum public blockchain, and using that, the compensation is directly credited to your account. So this happens in real time. This is something which is happening in the world. Apart from that, we have Internet of Things, wherein it's a network of Internet of Things, basically a network of various devices and the various infrastructure which is required to connect and keep these devices connected. So IoT is being used primarily in property and casualty insurance. So for example, if it's a home insurance, wherein you are insuring the articles at home, then certain devices will be implanted in your home, which will be tracked and which will be giving signals to the insured, so to the policyholder. So suppose if there's a risk of fire, or there is a risk of there's some natural calamity, there is a risk that the insured would be intimated, and the policyholder would be intimated, and he would have to make adequate arrangements. So this will help in risk prevention, effective control, and it will also help in accurate pricing. That means if you are acting very cautiously at your home, that also will be captured by these IoT devices, and then that can be reflected in lower premiums because you're a good risk for the insurance company. And lastly, it is biotechnology, which is especially useful in treatment of cancer. So there are certain biomarker indicators and early detection technologies which help in detecting, diagnosing, and treating cancer in a more timely manner. So we can, deal with it at the appropriate time, and probably reduce the cancer mortality rates. Now, apart from these emerging technologies, the world over and in India, we saw certain new product designs which came up in the insurance sector as a result of the pandemic. In Indian context, we had COVID-19 health insurance plans like Corona Kavach and Corona Rakshak, which specifically covered for the pandemic. This I discussed earlier. Apart from this Indian use case, you had 3 use cases in life insurance space from across the world, which need attention, and you can think of developing such kind of platforms in Indian context also. One is Mango Life, which is a Mexican, which is in Mexico, which is a digital life insurer which issues life insurance policies within minutes completely online. Similarly, you have Vitality, which is popular in South Africa. It's a South Africa-based insurer, which has developed an entire ecosystem wherein it is ensuring that people take care of their wellness, their health, and that is reflected in lower life insurance premiums and lower health insurance premiums. Now, in health insurance, even in India, we have players who are developing wellness products, because health insurance is a short-term product, a one-year product, wherein if you're taking steps for your wellness in the short term, I'm going to give you benefits in the form of health insurance premium for the next 1 year. But Vitality is also implemented in the life insurance sector, wherein life insurance is something which deals with mortality, term insurance products, which is you need to have a long-term view of the mortality. So they have seen to it that probably wellness in the short term helps to maybe reduce your mortality in the long term. Similarly, you have LOT, which is a comprehensive life cover. So it tracks the lifestyle changes that you make. If you have a loss of job, or if you change your job, change your city, if you get married, then the amount of insurance that you have taken, the cover that you have taken, that will also be altered. Now, there are certain new products which have been developed in the Indian context also. The Indian regulator, which is IRDAI, Insurance Regulatory and Development Authority of India, it had launched something called Sandbox in the year 2019, much prior to the pandemic. Sandbox is, wherein you can experiment and launch certain innovative products on a small scale in the Sandbox platform. You'll have to take the regulatory approval for Sandbox, and you can launch it only for a period of as short as 6 months. And then if it turns out to be a success, you can go with a full-blown launch. If it doesn't turn out to be a success, then you can scrap it. So under the Sandbox, there were more than 300. First, it was implemented in the non-life sector in 2019, and recently it has also been, the implementation has also started in the life sector. So in the non-life sector, there were more than 300 applications for new ideas, innovative products. And out of that, around 17 to 18 received the regulator's approval. Some of them were friends assurance, which is, you generally cannot get a group health policy if you're unrelated. It's an unrelated group, you don't get a group health policy. But suppose but it was allowed in case of marathon runners, a group of 6 or 7 runners who are running, they will pay a group health insurance premium. And if there is an event, then the person who is, person is suffering from some casualty or some health issue, then he will get the amount. And in case if there is no such casualty, then you'll get back a part of your premiums, group health premium. Similarly, in the health insurance space, you had wellness products. So wellness products basically operate like this, that if you complete a certain number of steps, or if you burn certain number of calories, etc., then you get a discount in your future renewal premiums. But then why to wait for those discounts? Why to wait for the next year? So instead of that, now health insurance companies have launched the concept of credit points. So you get credits for every wellness activity that you've done as defined, and which is tracked on the variable. And once you get this credit, it can be utilized to pay your gym membership fees, or it can be utilized for reimbursement of the OPD visits to the doctor, etc. Similarly, in the case of motor insurance, as I told you, it was pay as you drive was started. So not only that, if you're driving for a lower amount of time, your premiums would be lower, but since there is a device installed in your motor vehicle, if you are a safer driver, that means if you're a good risk for the insurance company, your premiums will be lower, because your driving behavior will also be tracked. If you're not a good risk, then your premiums will be higher. Similarly, a floater policy was launched in case of motor vehicles, wherein if you have more than one motor vehicle, then you can delete motor vehicles to the extent you want to use, and your premiums would be decided based on the point for which time points for which you have added the vehicle in your policy. Now, after having discussed the new technologies and the new product designs in the sector, we need to understand and appreciate that the pandemic has in fact shown to us that there is a huge scope to increase the insurance penetration in India, because still there is a lot of population which lies uninsured. And this is reflected in the insurance penetration data. Insurance penetration is nothing but the insurance premiums, both life and non-life, to GDP, this ratio, insurance premiums to GDP. So in India, it is only 4.2%, the latest FY 21-22. Global average is around 7%. So we have a huge scope to increase insurance penetration. Even compared to the globe, we are very low. The insurance density is nothing but like per capita income, it is per capita premiums. Per capita premiums. So insurance density in the context of India is only 91 US dollars in financial year 21-22. For life, it is 69. For non-life, it is 22. They make up 91. But if we compare the global insurance density, then it is average is as high as 874 US dollars. And for some leading economies like USA, Singapore, and Switzerland, it is in thousands, 8193, 6161, 6742 respectively. So we have to think about this. Now, apart from this concept of insurance density and insurance penetration, there is something called a protection gap. Now, I'll give you an example that suppose if there is an individual who is earning, say, in between 10 and 15 lakhs in a year, and he has taken insurance, say his cover is, say, 50 lakh rupees. It's a term product. His cover is 50 lakhs. He's in his late 20s, suppose. His cover is, say, 50 lakh rupees. And then there are, if you actually calculate the value for which he needs to get insured, you can find such calculators on any of the life insurance company's website, that they'll ask for your lifestyle details, your income details, your health details, and then they'll flash you an amount for which you need to get insured. Because what is the purpose of life insurance? What is the purpose of term insurance? That suppose if a person dies and he has a family dependent on him, then they will not have to face a financial trauma. So they can continue with the same lifestyle that they were following prior to death of that individual. So basically, if I have taken a cover for 50 lakh rupees, and based on my, the cover, ideal cover for me should be 1.5 crores, then my protection needed is 1.5 crores, and I have a protection already of 50 lakh, that is half a crore. So the protection gap in my case is 1 crore rupees. So in the context of India, if you see, the protection gap is 83%, as high as 83%. So suppose if 100 is the protection needed, then only 17 out of that is the protection that we already have. And we still have a gap of 83%, which is the highest in South Asia. All the other countries, it is lower. You can see from the graph. And according to a report of Swiss Re, it states that if you want to bridge and close this protection gap, of course, closing it is a tall order, but if you want to close this protection gap, then till 2030, we have a scope of selling additional premium 78.2 US dollars, 78.2 billion US dollars. So that is roughly around 6.4 lakh crores Indian rupees. In Indian rupees, it is 6.4 lakh crores. Now, given that we have such a scope for expansion of the industry in India, the regulator IRDAI has come up with a vision of insurance for all by 2047. 2047 it marks 100 years of independence in India. So it has come up with a vision insurance for all. Now, what it has done, I will just highlight. It has ensured ease of doing business. So the government, at the government level, the FDI limit has been increased from 49% to 74%, foreign direct investment. The regulator has reduced the registration norms for Indian insurers, because the regulator wants new insurance companies to come up in the insurance space. Insurance was privatized way back around 2000, and still we only have around 50-60 players in the industry. We need more players in the industry, and we need more participation of the private sector players in the industry. There's been listing of Go Digit and India First. LIC has already been listed, merger of Exide Life and HDFC Life. A very remarkable change which has been launched by the regulator, that is, in case of pure protection products like term insurance products or health products, they don't need prior approval of the regulator. You can set up a product management committee comprising of your CXOs, and at your level itself, and with intimation to your board, you can launch the product even without the prior approval of the regulator. It is remarkable. Similarly, we need a lot of capital. The current chairman of IRDAI, Mr. Panda, Debashish Panda, he is of the view that if you want to increase the penetration in India, insurance penetration in India, if you want to double it in the next 5 years, that means currently it is somewhere around 4%. If you want to make it 8% in the next 5 years, then you will at least require 50,000 crore of capital in each of these years. So naturally, these other forms of capital, which are the issuer friendly, like preference shares and subordinated debts, are easily made available. Similarly, as I told you, at the government level, we have composite licenses being thought of for, so a company can deal with both life and non-life, and a company can also deal with non-insurance products. On the innovation side, we have a regulatory sandbox, as I mentioned, for innovative products, and the limit for these innovative products has been increased from 6 months to 36 months, because once you launch such an innovative product, you have a huge investment on the technology aspect, on the digital assets. So 6 months becomes a very short period to decide whether it is feasible or not, because you'll not be able to recoup your technology costs. So this period has been increased to 36 months. You can continue to sell the product over 36 months. If it's a success, launch it fully. If it's not a success, scrap it. There's one more key initiative of the regulator, Bima Sugam, which would be a one-stop shop, wherein it will be a single portal for buying policies, servicing, claim settlement, etc. Similarly, there is regional allocation to the insurance companies. So all the private sector players in the country have been allocated certain states. The company where I work, we have been allocated the states of Jharkhand and Goa. So we'll be focusing on increasing the penetration in these states by launching products which are suitable to the people of these states, by getting in touch with the government officials in those states. Similarly, on the reporting side, we will shift to implementation of risk-based capital and risk-based supervision, wherein currently we are having a kind of a factor-based solvency in India for insurance companies. Factor-based solvency is the book liabilities, that is the reserves that is calculated, a percentage of that, giving you a very high level idea of it. So a percentage of that book liability is being held as your solvency capital requirement. That is a minimum solvency capital requirement. You should have at least 1.5 times of the minimum. Your actual capital, your actual net worth should be at least 1.5 times of the required solvency margin. But now this would be changed, wherein every insurer would be allowed to develop its own internal model, wherein every insurer will, using its own actuarial models, they will estimate their own mortality risk capital, their own expense risk capital, own lapse risk capital, own investment risk capital, and then the total risk capital after considering the correlations between the various risks. And this total risk capital will be what you should hold. That should be the minimum capital that you should hold. So if you are managing risks effectively, you could have a lower capital. Or else the other way, if you're showing a lower capital, then you should be able to show that your qualitative risk management framework in your company is good. Similarly, we also have a transition to IFRS, International Financial Reporting Standards. This is the IFRS 17, International Financial Reporting Standards 17, which is applicable to insurance contracts, is getting implemented from this year internationally. In India, it will be implemented in the next 2 or 3 years. But it is something which will completely change the way in which insurance accounting traditionally happens. So given the scope of the scope of increasing the penetration, and given the regulatory initiatives, you also have great career opportunities in the space of insurance. Majorly that I'll be discussing certain traditional ones and certain the new opportunities even in the traditional roles. So you have actuaries. Actuaries are basically, as I told you, we are risk professionals which make a sense of the future. We are involved in pricing of products, because we decide the premiums based on the cost of insurance. We are involved in valuation of the products for the purpose of valuing these products in the balance sheet. We are involved in determining the value of our company. In case if it's listed, we need to determine something called the embedded value of the company, which has an important role to play in deciding the market price. Similarly, it affects the investors' decisions. Similarly, we have data science professionals. As I told you, that we have seen emerging technologies being implemented in the sector, right from AI, machine learning, etc. So we have data science professionals which would be increasingly needed in this sector. We would require investment professionals, that is fund managers. People who will work in the an investment banking kind of roles, who would ultimately become the fund manager. Now, this is relevant more in the context of life insurance, because life insurance is a long-term product. And most of the products in the life insurance space, even now, are investment products which offer long-term investment guarantees. So investment is a key pillar of a life insurance company, and you have a great role to play there, especially in the debt instrument space, because you are offering guaranteed returns to the customer, generally most of the investments are in debt instruments, and the regulations also require majority of the investments in the debt instruments. So if you're trying to do CFA or CA, so you can focus on the debt instruments aspect of it. If you're interested in debt instruments, in G-Secs, in bonds, corporate bonds, then insurance is a great area for you. Similarly, risk management is a key area, because as I told you, in IRDA is going to implement risk-based capital and risk-based supervision. So risk management, actual as well as non-actual risk management, will be an important aspect. Similarly, we would have accountants who specialize in insurance accounting. You are, one of the organizers is the Department of Banking and Insurance, and I hope that insurance accounting is a part of the syllabus. So, if you're interested in that, that's a good area. And again, insurance accounting, as I mentioned in the previous slide, is undergoing a paradigm shift, wherein we are moving to IFRS 17, which will change the way accounts are reported. Currently, we show 100% of the premium income that we receive as income. And if we pay out the maturity proceeds, say in the 10th year, we are going to show 100% of the maturity proceeds as expense. But this is not true, because if there is no death, then it is as good as taking a deposit from the customer and repaying the deposit. And a bank never shows the deposit as its income and the repayment of deposit as its expense. So insurer also should not show it that. So under this new IFRS, only to the extent of the charge which I am charging the insurer, charging the policyholder for the pure risk, that means the mortality charge, which is inbuilt in my premium. So suppose if a premium 1 lakh, in that if only 15%, say 15,000 rupees is my mortality charge, only 15,000 will be routed through the profit and loss account, the revenue account, and the balance 85% will be shown as a liability directly in the balance sheet, and the repayment of it will also be routed through the balance sheet. So this is, I just gave you a brief thing, a brief understanding, but this is a very important aspect in insurance. And in fact, if IFRS 17 specifically requires a good grasp of actuarial knowledge and accounting knowledge. There is a new profession which is coined. It's called accountuary. That means you are an expert in accounting as well as actuary, which will help companies implement IFRS 17. Similarly, underwriting. Underwriting is risk assessment. Very, very important in the life, especially in the non-life space. Similarly, since we are increasing the digital presence, marketing, branding, and strategy is an important aspect. And similarly, sales training is a key aspect. Sales training is where, it has two aspects. One is that you actually don't sell, but you train the sales force. Insurance products are pretty complex in their design. So I have to explain these complex products to my customers, potential customers. So I need to train my sales force so that they explain the customers in a way that the customers understand. So if I'm good at communication, basically, this is a good aspect, good idea. Especially professionals from the HR background have a good scope here. Similarly, there could also be roles here in sales training wherein you're involved in creation of graphics, wherein you create presentations and graphics which make the product easily understandable to the population at large. So summing up, I started with the pandemic, how it affected the economy, how it affected the insurance sector, but it steered the way to a full-blown digital transformation in the insurance industry. We talked about InsurTech. We talked about the various emerging technologies which are the basis of InsurTech. We talked about the various new product designs which have emerged as a result of the pandemic. We also talked about that this particular industry, insurance market, has a huge scope. And in order to tap that unutilized potential, we have the regulator taking the lead, planning to have insurance for all by 2047. And given that there is such unutilized potential, we also have ample career opportunities in the sector. Now, having dealt with all this, I would like to conclude this keynote address with something more philosophical. On a philosophical note, I remember Robin Sharma, he had said that status quo is the current normal, but if you go out of your comfort zone, and then probably the situation which was frightening for you earlier, that becomes your new normal because you have experienced it, you have faced it. So normal is never going to be a static thing. It is always going to change. We'll constantly chase it, and at the end we'll find that the minute we think that we have found it, it has shifted to some other direction. So the only thing that we need to remember is that the only thing which is certain is probably uncertainty. You have to be ready to change. We have to continuously assess what is the new normal and reassess what is the new normal. And develop the art of readjusting ourselves to the new normal. Only then we can find peace in turmoil. So the idea is that we have come a long way by reacting to the pandemic, by reacting to the new normal. But then in future, we also have to be proactive and we have to take our own steps towards innovation and growth. Thank you. I would request if there are any questions you can ask.
Thank you, sir, for your wonderful insight. Now, I would like to request our co-convener, Ms. Priya Tiwari, to take over.
Thank you, Rohini ma'am. We would now begin with the Q&A session. There are various questions that we have received from the participants. One of the most common question was that what are the career opportunities available post COVID pandemic, which you have already remarked. So we move on to the next question. What changes have been done in the structure of the insurance industry for adaptation to the new normal, sir?
Yeah, thank you for the question. It's a very insightful question. As I told you earlier, that the core business or the core structure of insurance business will not change. So yeah, although as I said that there is a shift from looking at insurance as an investment option, merely as an investment option, to looking at it in the right perspective as a, as a means for protection. That is a marked shift in the consciousness of the people, but there is no fundamental change in the structure of the industry as such. Of course, the mode of delivery has shifted from the traditional to a more digital mode of delivery, but the structure and the core business of insurance still remains the same. The way it will be delivered, the way pricing will happen, the way it will be more data driven, it will be more customized and personalized. So this will change. There'll be, because of use of data, it could be more accurate. The designing of products, the pricing of products could be more accurate, but the very fundamental structure and the business of insurance still remains the same.
Thank you, sir. Our next question is, what do you predict as the new normal in the insurance sector in the next 5 years?
This is again a very key question. Now, again, I'm referring to a Swiss Re report which I read recently, that although we have a growth of around 10% last year in the premiums, we expect to grow at an annual CAGR of 14% in the insurance space. And Swiss Re has expected that by 2032, India will be the 6th largest player in the insurance space in the world. Similarly, as the regulator is focusing on expanding insurance, there would be more insurers because it has ensured ease in doing business. So there will be more insurers in India. We currently have only 50 or 60, including the life, non-life, and standalone health companies. So we would have more number of insurers. And similarly, the regulator is pushing insurers to come up with differentiated niche products, more products which deal with various needs, various insurance needs. So that would be one aspect. And one more thing that probably, given that certain areas like cyber insurance and climate risk insurance, these would be again critical in the future.
Thank you, sir. Our next question is, what is the one piece of practical advice that you would give to the policy and the non-policy holders?
Yeah, again, now here to give an advice, if you are a policy holder, then as I said that the example which I gave you, is there a protection gap? That means the cover which I have brought, the cover which I already have versus what is the protection that I need. I can find it out based on the life value calculators, which are easily available on the websites of insurance companies. And in case if there is a protection gap, then I should go ahead and ensure that I take the necessary action and buy an additional cover. Similarly, if you're a non-policy holder, and especially if you're young, then again, you should look at insurance as something which is a need. It's a necessity, because the pandemic has shown that even young people can die. If you're young, if you have a family which is dependent on you, then it is imperative for you to buy a term insurance policy, which will pay your family in the event of an unforeseen event, in the event of death. the way the way you buy antivirus software for your computer system, you need to protect your your family in case there is a financial trauma because of your death. I think so. You need to look at it as in the right perspective. Similarly, if you're if you're thinking about your parents who are nearing retirement, see, your case is that you might have, once you start working when you're young in your 20s or early 30s, you don't have a lot of accumulated wealth. So in case of an unforeseen event, the proceeds from a life insurance policy will be helpful for your family. But that will not be true in the case of your, a person who is nearing retirement, who already has a lot of accumulated wealth, and probably his own children have also become independent. So in that case, what would be needed is an annuity policy or a pension policy, wherein you need to cover yourself for the longevity risk. That means, suppose if you are at 60 and you expect to live for the next 25 years, then no bank will give you a fixed deposit which will guarantee you the investment income over the next 25 years. So probably going ahead with an annuity policy which gives you guaranteed returns over the next 25 years would be the right way to go ahead. Again, while also looking at it as an investment product, you need to insurance has its own merits. That means insurance is to a great extent, in case of unit linked, up, if your premium per year is less than 2.5 lakhs, then insurance is tax free. Insurance proceeds are tax free. And in case of non-linked, if your premiums are from the next year, if your premiums are less than 5 lakhs, it's again tax free. So insurance offers you competitive tax-free returns, after-tax returns, as compared to other investment opportunities. So you have to evaluate in that context also while going ahead with insurance, because once you start earning, you'll have to manage your savings by investing properly in various financial assets, including insurance, debt, equity, mutual funds, etc.
Thank you, sir. There are various questions that we have received from our participants, but however, due to time constraint, let us take the last question for this session. Sir, government has been supporting the insurance industry for a long time now. Are there any major steps taken by the government in the current times?
Yeah, this is again a very important question, because especially the Indian government has been at its forefront for increasing the penetration of insurance in India, majorly by launching certain certain flagship government schemes in the insurance sector. To name a few, the one in the context of life insurance is Pradhan Mantri Jeevan Jyoti Bima Yojana, which offers at a minor premium of 430 rupees a year, it offers you a cover of 2 lakh rupees in the event of death. And this was launched in 2015, and many of the country's country's residents, lower income groups, were benefited out of this as a part of when they had to face the pandemic. Similarly, you have the Ayushman Bharat Pradhan Mantri Jan Arogya Yojana, PMJAY, which offers 5 lakh rupees cover in case of health insurance for secondary and tertiary health care, again at a subsidized cost. So this is one of the largest, this is the largest health insurance scheme funded by the government. It's one of its kind. In the other sectors, like crop insurance, you have the Pradhan Mantri Fasal Bima Yojana, you have Pradhan Mantri Suraksha Bima Yojana for accidental benefit, and so on. But the most important ones and critical ones are the Pradhan Mantri Jeevan Jyoti Bima Yojana for life insurance and Pradhan Mantri Jan Arogya Yojana, Ayushman Bharat, for health insurance. Yeah.
Thank you, sir, for patiently answering the questions of our participants. We appreciate the efforts you have put in to share your knowledge and expertise, which has provided us with valuable advice to comprehend the transition to the new normal. Your presentation was truly captivating, sir. The points that you covered, from the impact of the COVID in various in the various life insurance, health insurance, and the other non-life insurance, was truly inspiring. The career opportunities that you provided was very insightful and will be helpful for our budding students. Thank you once again, sir. I now request our second convener, Dr. Siddhi Roy, to introduce the next resource person for the conference. Over to you, Dr. Siddhi.
Thank you, Priya ma'am. Good morning, everyone. It gives me immense pleasure to introduce our speaker for the first session, Professor Dr. Alvini Maria dos Santos Santiago. Dr. Alvini is a professor in the postgraduate program in dynamics of semi-arid development and public administration at the Federal University of Vale do São Francisco, Brazil. She is the leader for the Laboratory for Careers and Skill Development Research Group and a member of the Governance for Sustainability and Low Carbon Management Research Group at the Federal University of Bahia in Brazil. Her work as an educator involves teaching, research, and innovation. She was a visiting fellow at the University of Birmingham, UK, and at the University of Tampere, Finland. Her studies focus on the contribution of people and organization towards the 2030 agenda, which encompasses gender equality, circular economy, business ethics, and sustainable development. Ma'am is also founder of Santiago Eco Amigos, a foundation which relentlessly works towards regenerating nature to recover biodiversity and also towards educating future generations to understand the implications of the same. This is just a brief glimpse of ma'am's accolades and achievements. I would now request Dr. Alvini to begin the session. Over to you, ma'am.
Good morning for you, for all. It's my pleasure to be here. I would like start to thank you, Dr. Mitali, and also the students data sheet. And it's an honor to be here. Should I share the screen, Dr. Sidi, or someone else is sharing for me?
Ma'am, are you able to share the screen? If you're able to find, else we'll share.
Okay, I will.
Yes, ma'am, your screen is visible.
It's visible, okay. But I wanted to put the full screen.
Yes,
It's
ma'am,
okay.
that would be better. Yes, thank you, ma'am.
You are very welcome. So good night. Thank you very much for the invitation. Thank you very much for the word. Talk a little bit about my CV. So my talk this morning for you, right now I'm in New York. It's media about 7 minutes after midnight. We are going to talk here, do an introduction. I would like to make some questions to make we think about the theme, also the agenda 2030 about the sustainable development goal, talk about the world topic company for CSR, corporate social responsibility, India topic company for CSR as well, and the Brasilia topic company for CSR. From the theme of the green HRM to NBS, we are moving from the enterprise environment to the global, with the proposal that we are thinking about nature-based solutions. So we have final remarks, questions, and then I'm going also to suggest some reading for today. To start, I would like to clarify some of our main concepts that we call the core concepts. Green human resource management, that we stand for GHRM, is the practice that aims at the cooperation of people to achieve individual and organizational goals, also aiming at the mutual and sustainable development. Nature-based solutions refer sustainable management and use of natural features and process to take social environmental challenges. These challenges include issues such as climate change, water security, water pollution, food security, human health, biodiversity loss, and disaster risk management. In this sense, CSR, corporate social responsibility, is the responsibility of an organization for the impacts of its decision and activities on society and in the environment through ethical and transparent behavior. They are some of the concepts that I am adopting for talk to you this morning in India. So to start our reflection and to think about, I bring Frank et al. That with the question, how do we meet three central challenges of the Anthropocene: mitigate and adapting to climate change, protect biodiversity, and ensuring human well-being. So I would like that we all think a little bit about these three challenges that we are faced today, and after the pandemic, or still there are some regions that we still have the COVID pandemic as well. So how can we meet these three challenges? The other question is, what are the role of the business enterprise to meet those needs? So we need to think as a way of an individual, a business enterprise, and the whole world, the whole globe for it. To talk about that concept, I'm showing the world map and showing India, where we are speaking now, in Brazil, where I'm from, in the US, where I'm right now attending the 67th conference on the status of human of the United Nations. To speak about United Nations, I would like to call the attention for this global plan of development. The Agenda 2030 brings 17 sustainable development goals that we would like to achieve the development by 2030, as we can see. So, no poverty, zero hunger, good health and well-being. The SDG number 4 stands for quality education. The number 5 is gender equality that we just celebrate yesterday or 2 days before for you in India, the International Day of the Women, that we talk about gender equality. And the SDG number 6 refers to clean water and sanitation. The number 7, affordable and clean energy. We talk about sustainable and renewable energy. Number 8, 3 about distance work economic growth. And the number 9, industry, innovation, and infrastructure. Only to mention the 10 SDGs. So all those goals, there are other goals about 169 to achieve. And the rich country, the G20, they compromise to provide funds for other countries to achieve the sustainable development. And another question that we can raise right now is how the pandemic, how the COVID affects the achievement of the Agenda 2030. So when we talk about sustainable development, and then we are talking for students and staff in the commerce course, we bring, I brought the world top companies for CSR. And this is the organization, it's a Canadian organization that we call Corporate Night, that they do the ranking, the global rank of 100 companies that is considering the most sustainable company on the world. And then I bring the 50. And it's sanitized steel from Portland, US, Vesta Wind Systems, and Aarhus, Denmark, Brembus Limited in Sydney, Australia, Brookfield Renewable Partners em Hamilton, Bermuda, e Autodesk in San Francisco, US. So what are the indicators that corporate night is evaluated to classify the company? So they also talk besides sustainability, considering the triple bottom line, the social, the economical, and the environmental. In the social aspect, they mention about the gender equality in the company, the business enterprise. They talked about race equality in the environment, the payment, the rate of the payment, compare the CEO salary to the employees. So this is the link. I have the link if anyone wants to learn more about the classification of the 100 most sustainable companies we can access. I also look at the internet and found a website named Indian.csr.ie, and they brought these companies as most sustainable in India for 2021, 2022. Reliance Industry Limited, HDFC Bank Limited, Tata Consultant Services Limited, Oil and Natural Gas Corporation, Infosys Limited, EITC Limited as well. And also looking for India top companies for green HR, we found Wipro, Suzlon Energy, Oil and Natural Gas Company, e ITC Limited. To do the dialogue with Brazil, the Brazilian top company for CSR 2022 and 2023 the Bank of Brazil. It's a financial company, and also Brazil Energy SCI is a company of renewable energy, and Naturicor that has been in the list of the most sustainable companies for years. To do the example, I brought the case of Natura in Brazil. So Natura was founded in 1969, is the largest company in the cosmetics, fragrance, and toiletry sector in Brazil, and the large and direct selling segment. Natura has a revenue of 7 billion. They have about 7,000 employees and about 1.7 million direct consultants. So Natura works with the vision that the principle that believe in the potential and the relationship and in the power of commerce to raise awareness, causing people to connect with their own body, with the surround environment, and with each other. So Natura has a sustainability plan. So its vision for 2050 is based on 3 goals that they classify as brands and products, the network, and management and organization. Regarding the brands and products, Natura concentrate and try to work with the formulation and the packing to avoid use of plastic or single packaging, and also work with the forest, the Amazon forest, to get the product from the forest. And this way, the indigenous people and the other people who live in Amazonas can sell the product to do the cosmetics. So the product and distribution, Natura cares about greenhouse gas, energy, waste management, and social biodiversity. So when Natura talks about the networking, it thinks about all the stakeholders, like consumers, consultants, employees, communities, and suppliers. They think not only in the owners, but also in all the stakeholders. So another pillar is the management and organization, and they draw a management model, government and society, stakeholder engagement, ethics and transparency in governance for sustainability. So This is the case of one of the most sustainable Brazilian company, that is Natura. It's present in not only Brazil, but in Latin America and even here in US. So if we talk about what the world from the pandemic for the transition towards the new normal, and then from the green age to NBS, and then to talk about natural based service, I bring the case of Tata. So, and we see what was Tata Trust approach while developing the soil conservation program. So we move from a situation of the green human resources when the company set the mission, vision, and values, and do all the personal activities toward to find employees and they call partners with the same values of sustainability to achieve circular economy. And moving to the nature-based solution, that is approach of a company can do to improve the community. So the case of Tata's approach, they bring the experience of treat the soil. So what Tata has been doing is over the past few decades, they have been doing community mobilization.
Alvani, ma'am, sorry to bother. Your screen is not visible, ma'am. Have you stopped screen sharing, ma'am?
Yeah, I stopped a little bit screen sharing to change it. Okay.
Okay, ma'am.
Okay, thank you very much,
Yes,
Dr. Sid. So Tata, over the past few decades, they have worked with community mobilization in the agricultural development program, having been the backbone of soil conservation effort in India. So they have enabled the establishment of sustainable practice and process and catalyze the creation of local economic framework for advanced development. So one of the main challenges for nature-based solution are the conservation of soil. So this Tata's Trust develop a systematic approach that leverages the foundation of previous initiatives to inform and empower communities to implement independent soil conservation efforts with the existing social ecological context. They measure engagement include watershed treatment for moisture, retention of soil conservation, construction of water harvesting, structure to maximize harvest of rainwater runoff, and thereby controlling the soil erosion and plantation activity. So they think it's when the company goes from just the I'm going to start again the screen share. When the company goes from just to stay inside the company to go to the community to work to improve and what are the nature-based solutions? We have a green, improve the soils, green reefing, take advantage of rainwater, is some of the examples. I had a video that I thought interesting that I just come back for India. I was there in November, and then I was surprised how India has improved the life and the quality of life in 10 years. So the first time that I visited India was in 2012. So in 2022, I visited India again and got surprised because I was in the Netherlands studying about the circular economy because the European Union has a plan to become circular by 2030. And my sense is that despite the Netherlands are in Europe, and the European Union is working hard to make the economy circular. For my sense, India has improved much more than the Netherlands, that is considered to be one of the countries with most advanced circular economy approach. But I don't think I can show this video in the YouTube, or if someone can help me to play the video, Dr. Cidi. Dr. Cidi?
Yes, ma'am.
So I'm wondering if someone can play this video, or should I play this video?
Yes, ma'am, just.
Let me know.
We're just trying, ma'am, just.
The sound is okay. It is?
Yes, ma'am.
Okay.
India has changed massively. In 1980, only 1 in 10 kids received their necessary vaccination. Today, India provides essential vaccines to almost 90% of children. It's mind-blowing. India is also educating way more children than ever before. In 1970, over half of the children in India were enrolled in primary school. Today, primary school enrollment is nearly 100%. Both health and education are contributing to great progress.
Ma'am, we can hear, but we cannot see the video. Have you played it?
Less than $2 a day.
Dr. Albany?
60% of Indians lived on less than $2 per day. Today, it's down to 10%. India's made tremendous progress in a short amount of time.
Did you?
Yes, ma'am. We could hear the video, but apparently we could not view it.
India's an amazing place. Nearly 20
Dr. Sidi, say again.
Yes, ma'am. Ma'am, we could hear the video, but we could not view it.
Okay, that's why I asked someone to play. May I send the link so
Yes, ma'am. Ma'am, you
I
can
will-
put the link in the chat box.
okay. I think I need to stop sharing to buy. To copy it. So it's in the chat. So anyone can play and share the screen, please.
Yes, ma'am.
Okay, thank you. So we need to go back. It's not this one.
Yes, ma'am. Just
Netflix, Hotstar, and Prime are such massive content libraries.
India has changed massively. In 1980, only 1 in 10 kids received their necessary vaccinations. Today, India provides essential vaccines to almost 90% of children. It's mind-blowing. India is also educating way more children than ever before. In 1970, over half of the children in India were enrolled in primary school. Today, primary school enrollment is nearly 100%. Both health and education are contributing to great progress. You see it in the number of people living on less than $2 a day. In 1980, 60% of Indians lived on less than $2 per day. Today, it's down to 10%. India's made tremendous progress in a short amount of time.
Okay, thank you. So this is a way to show another experience of companies that they are worthy and invest in the green human resources, not only in the green human resources, but in natural-based solutions. And as a country, so if we move it from the individual, business enterprise, community, and the country, we can say that India is leading the change, It has been very expressive. So for our final remarks, I brought this screen. This is art from Tarsila do Amaral, and it's called The Workers, to bring that when we work with the people, as we see in the painting, there are no one is equal. We need to embrace our diversity. And our diversity is huge, not only in the appearance, but also our behavior, our way of we react to the fact. So if you are a manager or educator or even parents, we need to develop in this sense. As we are leader or a manager, we need to find the potential of each person, what this person has of special, and focus in the strength and not what they lack. That's a way to management, to do the green human resource management. And the pandemic, when we talk about the pandemic, we saw a huge change from the way that we work, not only working, but the new normal brought our new challenges, even the challenges regarding the environment, but also the challenge, the novel way of work online. So even now, when I need the conference of the status of the women, many activities are done virtual. So we are working the hybrid format. So for the world for transition toward this new normal, how? So we brought some review questions. What is the implication to green human resource management? And then I bring as part for further reading Vision 2021 and the Hill all 2020. And now I would like to see comments, any questions. And also I brought a little of art. Yes, I brought it the thinker, the Rodin. Any questions, comments?
Yes, Dr. Anthony. Thank you, ma'am, for the insightful session. It was indeed a great pleasure listening to you. I am sure our participants have learned a lot from your vast experience and knowledge. Now I request our co-convener, Delisha D'Souza, to begin the Q&A session. Over to you, Delisha.
Thank you, madam. Good morning, everyone. It was really an enriching session. It is said that curiosity is the engine of achievement. And I'm sure we have many curious minds in our audience too. So let's now begin with the Q&A session. We have some questions already typed in the chat box. So let's take the first question. How would virtual reality impact the transition from green HRM to nature-based solutions? That's our first question.
Okay, Delisha, it's very nice to see you and your voice as well. Thank you very much for the question. And so, as understood, the question will, how would virtual reality impact the transition from green HRM to naturally-based solution? So, as I told you, green HRM stays in a company level, and nature-based solution, it's when the company investing beyond the company to the community or in the country. And what we see with the virtual reality and the social media that make it easier to connect, to get connected. So if the company has a strong CSR, corporate social responsibility program, they can involve the employees to work even abroad with different topics, or donations, or maybe they have the expertise in some fields to do, right? So that is one of the actions. Thank you very much for the question.
Definitely. Thank you, ma'am. We have another question from a participant. How do you foresee the role of business leaders in practicing nature-based solutions in organizations?
I think the role of the business leader are very important, because it's for the leader that everything starts. If the leader is not connected with the needs of the community, the needs of the country, it's much more difficult. We move for a natural-based solution, no? And sometimes we have leaders, they don't care about the environment. They don't believe in climate change. So they didn't have to deal with this challenge. So that's it's the difference, Delisha. Like in Brazil, I usually talk to my students that most of the managers, they are more managers, engineers, than business administration, with graduating business administration. And my goal as a professor for business administration in the area of e-commerce is to professionalize the function, the occupation of a leader, that they have a formal education in business administration, to be more connected, to study ethics, to study corporate social responsibility, and to get engaged in this kind of challenges. Sometimes the leader or the owner are more connected with the profit they don't care much about the naturally based solution. But this the corporate night that they have the 100 more sustainable company in the world, they show that company with more sustainability approach, they are more profitable. So to be sustainable, it's profitable too. Thank you.
That's true. Yes, ma'am, that's really true. Thank you very much. The third question that we have is, do you think any alteration in the mindsets of human resources is required for the deployment of nature-based solutions?
Yes, not only for the mindset of human resources, but also for the company. I think we need to do like, I don't know if India has a plan as the Europe Union has of circular economy, that we think about simple actions, but it makes a huge difference. So when we try to offset the carbon to be zero plastic, to be zero waste, is a very different. And as HR works with training and development, we can start on inside the company, train the employees, and they can be the multipliers in the community.
Thank you, madam. We would like to address all questions from the audience, but however, due to time constraints, we will have to take the last question now. What are the specific skills required for effective implementation of nature-based solutions in India?
So I think that the skills is very complex skills that and then also we need to work in multidisciplinary team. So we are going to need the design person who design the architect, the civil engineer, the manager, the biologist, the physicist. We need all the skills for this profession to do nature-based solutions. So if we think about like India, in Brazil, we have similar economy, may I say that. So our infrastructure needed to be trained and needed to be improved to don't pollute the rivers, don't have too much waste, working with composters. Today, I learned here in New York, they have a app that in the application, you can find out where there is a container, a collector for compostage. So all the waste goes to different for they exactly, and then they help to improve the soil. They help to improve the water instead of harm the quality of life in general.
Thank you, madam. You have shed significant light on this highly relevant subject of nature-based solutions and green HRM. I'm sure that our participants have really had an enriching experience altogether. You highlighted very rightly the role of top companies in contributing towards CSR, and also the case of Natura Brazil and its vision of sustainability, biodiversity, how the company tries to connect with its customers was rightly explained by you. You also covered the Agenda 2030, that is the Sustainable Development Goals, I'm sure that, Madam, due to your better insight and practical knowledge into this crucial topic, our participants have received a better understanding on the same. Thank you, Dr. Alvini.
Oh, thank you very much. Thank you very much, Delisha. Thank you very much, Dr. Sid, Dr. Mistari, all. And to the end, I leave some reference and some further reading. Who would you like to work or to study this subject? I will be happy to help you with the orientation or with advice. So there are many here. And in the end, I leave my, thank you very much. Muito obrigada em português, my native language. And here are my contacts, my email, the Instagram, and also the LinkedIn. I'm also in LinkedIn, and then I will be happy to get in contact. I ask you some apology because it's about 1 a.m. in New York. So
Thank you, ma'am, for sparing your time for us. Thank you.
Thank you very much. So without much delay, I would now like to request our co-convener, Ms. Rashmi Bendre, to kindly introduce our next resource person for the valedictory session. Over to you, Ms. Rashmi.
Thank you so much, Delisha ma'am. It is indeed a great pleasure to have Mr. Amit Sangekar here today. He is a chemical engineer from UDCT, now known as Institute of Chemical Technology, and also has an MMS degree from JBIMS. Mr. Sangekar is currently heading the marketing department of Dinosaur Merchant Bank Limited. He has experience of 18 years into marketing in different geographies. He's worked with corporates like Castrol India, TCS, as a chief manager marketing with ICICI Bank Limited, Dubai, as a director marketing with Express Money Services while handling the Europe region, and is presently with Dinosaur Merchant Bank. His expertise lies in brand management, marketing strategies, multi-channel marketing, and digital marketing. He's commendably led campaigns based on his analytical skills, comprehensive knowledge of industry, successful implementation of brand strategies that have recalibrated ways to connect with the customers. He's also meritoriously integrated the digital marketing strategy into the traditional marketing, the offline marketing at Express Money Services. He's currently undertaken the revamping of Dinosaur Merchant Bank Limited brand in UK. Apart from these professional achievements, Mr. Sangekar has also excelled in the field of sports. He is also a qualified cricket umpire. He has anchored various events in UK, including the musical events and the stand-up comedies. He is also an avid traveler and enjoys exploring and documenting food across the globe. Indeed, we have such a multifaceted personality amongst us today. Requesting you to take over the session, sir. Thank you so much.
Thank you, Rashmi, for the kind introduction. Am I visible and audible to
Yes,
everyone there?
absolutely, sir. Yes, you are.
Lovely. Thank you. Good morning to each and everyone from a very cold and rainy London. It's around 6 a.m. in the morning here. And it's not like the rain's back in Mumbai, but still, it's kind of the weather which people always speak about in London. It is a real pleasure to speak to all of you. I'm thankful for the opportunity to speak at this international conference on forging the world for transition towards the new normal. Since for most part of my professional life, I have been a marketeer, I'm going to give my views on evolving marketing paradigms for the new normal. I'm going to start sharing my screen. If Rashmi or somebody could just confirm that once it is up, it is visible.
Yes, it is visible.
And is the full screen also visible to you now?
Yes, now it's visible.
Okay, lovely. Thank you so much, Rashmi. Before we get on to the so-called new normal, I think it is important to kind of understand how marketing and everything associated with it has evolved over a period of time. On the next slide, I'm going to kind of show you some bits of nostalgia. Now, perhaps for the students or the current generation, this nostalgia may only be visible in terms of the names of some of the products. But for the professors and the teachers, I think they will identify a bit more in terms of what this nostalgia really is. And why I'm showing this to you is because I want to set the context of how things have really evolved since over a period of time. So these are certain things. Now, I don't know how many of you recollect the old surf ad. That's Amul chocolates. Yes, there was something called as Amul chocolates too. How glucose biscuits as such evolved over a period of time. Sewing machines in India, how they were advertised. Soaps, for that matter. Another example of glucose D. Baby products like baby supplements. Now, this is one classical example of an old ad where the first time Lux actually used the image of a woman, and this was Leela Chitnis, a well-known actress during those times, on a print ad. Similarly, Gems, which was a popular chocolate for everybody during those times, and then other brand ambassadors and stuff who started getting used in various ads. This is just to set a context as to how things evolve. These are all old print ads, which have appeared either in newspapers, which have possibly appeared in places like magazines and stuff. Now, how did the marketing discipline kind of all begin? Possibly around the 1560s and all, there used to be just a term of buying and selling, or the act of transacting business was what everybody referred to as marketing, a pretty straightforward activity. Now, in the modern business term, it was around 1897 when people started calling the process of moving goods from a producer to the consumer with an emphasis on advertising and sales. That is what really marketing was and was how it started. Now, to understand the various elements of the evolution of marketing, we need to see the various phases it went through. The first era was kind of called as the production era. The Industrial Revolution is actually what set the whole stage for this kind of modern marketing, promotion of mass-produced items. Now, accordingly, early marketing kind of assumed a production orientation. The working theory was that customers simply needed to be informed about what goods were available to them. After all, you can't buy something if you don't know it exists. Classic example is Henry Ford during those times. Henry Ford said that if you really have a good thing, you don't need to advertise, it will advertise itself. That's what they really thought about it. Now, the company's approach was heavy on text. If you see the old ads, you will see a lot of text around it. You saw one of the ads about the baby supplements on the earlier slide. There will be a lot of text and highly informational, emphasizing price, quality, and standardization. In fact, the automaker, Henry Ford, was so kind of production focused that there was a time in between from 1917 to 1923 where they did not advertise at all because the demand was just so high. However, times don't stay the same and they kind of evolve. What then came about was called as the sales era. Now, leveraging on a production era was fine if you were the only player in the town. But from 1930s onwards, it became increasingly rare that any company would permanently enjoy a competition-free environment. So in response to the pressures of modern marketing, natural selection, businesses started developing unique adaptations. Now, this resulted actually in two core things which we speak about a lot nowadays: brand identity and an emphasis on selling orientation. Now, advertisements through different platforms such as radio, print, television were increasingly popular during those times. Additionally, sales guys also started going from door to door, telling people about products and stuff. The concept of marketing took place only after the products were produced. That is why nowadays, till today, people still associate marketing with selling. A classic example of those times was Coca-Cola. Now, in the 1920s, Coca-Cola kind of realized that they were not selling much of soda or cola, as we call it now, in winter. Now, if it was the old theory, then like Henry Ford, you would have stopped actually advertising because you would be producing less amount of cola. But what did Coca-Cola do? They started driving sales by attaching themselves to Santa Claus. To make it work, they actually had to solidify an image of Santa Claus that would appeal to customers. They found an illustrator who could do that for them. And for almost the next 30 years, that guy could continue to produce images of the iconic Santa, which we associated with Coca-Cola nowadays. And they actually sold a lot during winter too. This further led into what is called as the marketing era, where the focus started getting more on consumer needs. Because the industry started realizing that focusing only on business needs would leave customers unsatisfied. So identifying what the customers need and effectively customizing these activities started becoming a very important part. That is where the marketing concept as such was really born in the truest sense. Now, it revolved around the idea that reaching the business goals relies on understanding the needs of the target audience first. Additionally, it also concerns with providing with the desired satisfaction more than the competitors. So a market-oriented organization during those times began with pinpointing customer needs. Then they would segment the customers according to buyer-specific purchasing goals. And thus they could offer unique products to each segment, as we would call. Now, this was kind of a sea change during those times. While traditional marketing had focused on getting products to customers and convincing them to buy, this new approach was totally different. Marketers were driven to better understanding what the customer really wanted, what were their concerns, what were their desires. And by 1980s or so, the customer was truly in charge of what to buy. An example of during those times is Apple. The first time Apple wanted to launch their Macintosh product, they did this during the 1984 Super Bowl competitions. Now, that particular ad actually never really shows the product itself. Neither does it speak about any of its features. It's not about getting you to buy a product. Now, the entire commercial is centered on the premise that the new world is possible by taking a different approach to technology, one that places individual consumers and not big companies at the center. That is where the whole idea of the marketing started evolving. And this kind of then slowly went into what we today possibly call as the relationship era, or possibly societal marketing, as it is popularly referred to. Now, it is a concept that emphasizes on an organization's responsibility to develop strategies that positively would impact the consumer's well-being and the environment. Now, during this phase, the customers and the businesses started shifting their goals to provide a better quality, a favorable spotlight, while ensuring that the environment was also not harmed. Now, as a marketing concept and approach which prioritizes this kind of relationship is focused on encouraging customer retention so that the customer stays with you. The concept of loyalty and all these things started coming up during those times. Digital marketing channels evolved. They made it easier to kind of get your content across to your target consumers. Brands started thriving using social responsibility and those kind of concepts. The example which is kind of mentioned here is REI. And now REI is an outdoor equipment manufacturer and an athletic outfitter, where customers who became members for a small charge or one-time fee, they received additional perks. And that is how people started becoming loyal to brands. Now, this also slowly transitioned into digital marketing as we know from the 1990s onwards. This is where the world witnessed a shift in the dynamics of marketing. Marketers would struggle with developing marketing campaigns through traditional means. They didn't get as much leads as they were kind of expecting. It started becoming kind of stale as such. Now, what happened is digital marketing started getting evolved. It opened the doors for opportunities for better traffic, better exposure for products and services. And from the early 90s to kind of almost today, almost half of the world or possibly more is online. Businesses have kind of moved to digital platforms to effectively reach their target markets. Now, the surge in mobile phones, mobile devices has contributed to all this. And the evolution of the whole of marketing boils down to one thing, that is change. As the market pivots and new marketing channels emerge, what we consider revolutionary today will become obsolete tomorrow. And therein lies the beauty of marketing. It never kind of stops, or it never even stays the same. While this evolution is important, there is another type of evolution that also happened during the same time, which played an equally important part. And that is the conversation evolution. Now, if you see in this picture, the very first image there is of a stone tablet. So from a stone tablet to tablet computers, the way marketeers have communicated with their consumers, with their target audience, has gone through a number of changes. Now, the biggest shift kind of this is towards joining the customers, joining the marketing conversation towards the end. Now, in the beginning, the marketeer was the only speaker and consumers were kind of only listening to them. Instead of trying to persuade audiences, the first marketeers would only share information. This took place in public areas, so the messages could reach many people at once. Some of the earliest recorded advertising is kind of from ancient Egyptian times, when huge stone tablets covered in lines of hieroglyphics were announced laws and decrees, or kind of invitations also. The tablets were selling ideas rather than products. But this unilateral mass communication strategy persisted for centuries, I should say, and throughout the early history of marketing. Now, in the ancient Roman city of Pompeii, large wall paintings, a sort of an early billboard, if you could call it, provided information about gladiator games and political candidates. Virtually all these efforts to communicate with the public, whether to share current events or to place an ancient lost and found ad, were one-sided. The naturally skewed power of balance in favor of the speaker, where the audience feedback was never kind of an important. Now, the communication was kind of restricted to the public sphere, public spaces rather, so outdoors and in communal gathering spaces. Consumers did not have to engage with these messages at home or any other private or personal spaces. We have seen now what has happened now. Now, that changed, however, with the advent of printing press around in the 1440s, which kicked the evolution of marketing literally into high gear. Suddenly, the opportunity to develop ads, to speak to people, and all started developing. Still, it took time for the marketing conversation to expand from public to the private space. Now, in the late 15th century or so, there was this famously printed first English handbill. It was about promoting a book available at a bookshop, and it only said good and cheap books available. That flyer was possibly distributed on the streets of London, making it available in public. But due to the medium, it could now be consumed on a private space. You could take it home, you could read about it. And about 150 years or so later, ads began to appear in newspapers where readers could purchase newspapers and take home, changing the history of advertising completely. It was at this point that the marketing conversation tentatively entered the private space, where it has since literally settled like a couch of potatoes. Now, not long after that, when the Industrial Revolution kind of hit, products were mass-produced for the first time, and the beginnings of brand recognition and public demand for particular products started increasing. Consumers who had been forced to be kind of silent or just accept whatever they kind of got could now finally talk back with their purchasing power. Now, this power shift kind of was the first step towards creating a more balanced relationship between marketers and their customers. Now, it started marketing in your living room. And what do I mean by this? In the early 1900s, radio started becoming a feature in most people's homes. The first AT&T ad was somewhere around 1922 on New York radio. those 10 minutes of paid air time, a commercial for a new apartment complex, were the beginning of a major shift in advertising. Now, marketers could now share, still it was one-sided, messages with consumers in their own homes. Advertising had truly entered your homes by this time. This dramatic step was questioned at times even by marketers themselves. Now, somebody had actually during those times made a remark, the family circle is not really a public place, and advertising has no business intruding there unless it is invited. That statement would never hold true today, but that is what during those times was kind of said. The concern, the history of advertising from the 40s and the 50s was a period which was dominated by TV commercials as such. The prominence of TV ads sparked notable pushback actually in the 1960s, where marketeers were literally called as waste makers in a society which was plagued by consumerism. Trust in advertising started going down and consumers started demanding honesty. The pushback actually resulted in a new age of advertising, where now the customers started entering the conversation. Despite growing consumer skepticism, radio, television continued to kind of grow. And as time passed, traditional media gave way to digital media, and the internet became widely available. The first banner ads, as they were called during those times, were deployed around 1994. Then there was pay-per-click, search engine advertising, Google AdWords, and all these things slowly started falling in place. Now, as is done in many contexts, the internet kind of served as the great democratizer of the market-consumer relationship. With digital advertising started coming e-commerce stores and the popularity of customer reviews. And suddenly, marketing started becoming a two-way street rather than just a one-way street. Now, the instinctive human reliance on word-of-mouth recommendations again started taking center stage. Consumers were kind of finally empowered to easily communicate with each other about what brands they were using, the benefits of products and services. Now, digital advertising also pushed the marketing conversation further into our private lives. Our computers and cell phones are private devices. We often use them in our homes, and when in public, the screens are still for our eyes only. So instead of butting into living rooms with radio jingles and sponsored TV shows, marketers began to realize that if ads are going to reach the right consumers in their own homes, it also should be on their own terms. That is where I mean about the choice lies with the consumer. Ad blocking and stuff started coming into place. People could choose what ads they see. People could choose what kind of content they really wanted to. So instead of flipping various channels and sacrificing entertainment, they could install an ad blocker and continue with their daily activities as such. Now, how do you then reach those kind of 600 million devices which had about ad blockers installed on them? This is where consumer communities started getting formed. If you engage customers in a relevant conversation about your products, your brand can grow to become actually a part of their lifestyle. That is what marketers started to realize. Now, this also started organically building a brand of fans who advocate your company with authentic messaging. And this is where the popular term UGC, or user-generated content, started becoming popular among people. Letting customers join the conversation is not a bad thing to do. It helps them to form richer relationships with their customers, increasing the long-term value for the brand itself and strengthening, as we call it, as brand advocacy. There is more good news actually. With customers creating so much content, marketers have less creative work to do. I don't mean it in the literal sense, but customer content could now be at the core of all the marketing efforts. So what's the next thing in this evolution of whole marketing? Though the pendulum has kind of started swinging from unilateral brand communication to a multilateral consumer-driven communication, it doesn't mean that it will keep on swinging. Consumers do not want to be the only ones speaking. going into the future, brands will have to focus on maintaining this dynamic conversation that is just now beginning. Brands wanted an in into the consumer space. Now they have got it, but they now need to change not just the message, but the medium also in order to keep up. What does that mean? Messaging apps, chat bots, live chat supports, and so on and so forth. These are the tools of what we call as conversational commerce that are coming up now. Now, despite denoting technological advancements and seemingly futuristic in some ways, it is simply one step kind of towards establishing the natural state of back and forth communication between brands and customers. It will be more important now to understand customer needs and speak to them accordingly. Now, in addition, how can brands really use all of this? They can use all of this to evaluate how customers speak, how specific problems which customers have can be done. Now, for customers, it offers a path, which is to improve all these interactions with the brands and also kind of put forth their views as such. Now, having given this kind of context and having spoken about what the evolution is, what really happened that kind of has catalyzed or possibly spearheaded or possibly pushed everything into kind of an overdrive over a period of time? As somebody said, Thomas Leonard, all problems exist in the absence of a good conversation. So how did this conversation kind of first change? Now, a few things have happened over a period of time now. I'm not going to dwell a lot on the pandemic as such. People have documented it well. People have seen what its effects have been in a good way as well as in the bad way. But one thing that has definitely happened during this entire pandemic period was anything that we knew about normal went out of the window. And it wasn't just limited to one country, one region, one industry, one class of people, nothing at all. There was no, it was just there for everybody to face. Strangely, the term new normal is actually not a new term at all. People of possibly my age and possibly before, from 2008 global recession, would actually remember this term. That was the first time when the new normal term was actually really used. Well, not the kind of social media existed during those times, hence that kind of did not stick around. Now, what happens when crisis happens? There are recoveries, but there could be more crises. And therefore, that is kind of a perpetual circle which people get into. Now, for a moment in history, when the pandemic struck, every company shared the same simple mission statement: protect our people, our customers, and our business. Now, the terrible toll that the virus took and the mounting economic damage brought about a singular clarity and kind of an urgency of purpose, forcing thousands of company experiments in new areas of working and operating. Now, the lessons companies learned in the months after the outbreak were kind of profound. Virtual, digital, and automation started coming in. Supply chains were ruptured across the globe. Leadership teams dug into complex processes of recovery. These were moments of truth for each one of them. One truth was abundantly clear: you could not go back to the old way of doing things. The companies that most aggressively adapted and extended new ways of operating could turn this crisis into kind of an advantage. The recovery was never a straight path. Employees may have headed back to work in some cases. Operations have restarted on different timetables, following different curves in different countries, in different regions, in different industries and sectors. So the entire recovery has been asymmetric for all companies with global footprints and value chains. Now, in addition, the pandemic will continue to test all of us, striking at the hearts of communities and demanding that we be prepared for subsequent rounds of such crises to continue to happen. Companies will advance where they can. They will have to retreat where they must, often simultaneously, then adapt and start all over again. Now, what do I mean by a virtual, digital, automated world? Now, digital technologies and automation played a critical role in many companies' initial response to the crisis. So, for example, working from home as a concept which did not exist very popularly with a lot of people, started kind of becoming the new normal, as you call it. But it was not video conferencing technology like Zoom, nor collaboration software, nor house bandwidth to homes that was new. What was new was the sudden willingness of every function in the company, IT for sure, but there was legal, finance, marketing, sales, to cut through any kind of hurdles that were coming up and try and adapt to the new normal. Now, versions of these kind of happened across different businesses in different ways and in different intensities. Automation took on some work of the employees who were sent home and helped companies quickly respond to surges in those kind of demands. Now, the key questions for executive teams during those times: how do you deploy such kind of technology? Do you have sufficient bold and transformative vision to actually do such kind of a thing? And how will you prioritize your technological investments across marketing, sales, customer interactions, and the back office? There was a growing need for simplicity. The pandemic and the greater need for resilience also confirmed another lesson which many executives are already suspected. The supply chains of the future should not support yesterday's complex portfolios. So you needed to look at your products. You needed to look at the way you were speaking about them, the way you were marketing them. It was a time for company to eliminate products which were not needed, and when tempting, actually introduce newer products. Simplification in the face of necessity kind of goes beyond whatever you are thinking of: product ranges, organizational processes, and so on and so forth. Now, without international intervention to maintain this simplicity in future, businesses and product complicity, what will start happening is the kind of old thinking may start coming back in again. The key questions here: have you streamlined everything as per what the current situation demands? Do you have a plan for managing things going ahead? We need to build something of an agility which is speed, and agility that kind of lasts. Now, in 2 short months, when the initial part was, when the initial pandemic struck, it actually rammed through behavioral changes that many companies had tried to coax from people. Rapid innovation, decisions made fast, bureaucracy bypassed, the urgent needs were tackled, unimportant tasks were completely put away, small teams were put on the front lines, each experiencing some kind of different phases altogether. Now, but executives cannot afford to admire all this and kind of just stay as it is, because without intervention, it will fade away quickly. And when the perceived threat, so that's why I call it a perpetual circle, has gone away, you will think, okay, there's nothing else which will hit us. But as we have seen through this pandemic, you never know what could hit us when. Hence, agility, which is completely important for companies to look at. What do I mean by Back to the Future? Now, this is a popular movie, again, a kind of nostalgia for people. Every company had to figure out how to restart operations. But a long path to kind of recovery was actually separated companies into 2 distinct groups. The first group wanted to go back to normal, following the path of least resistance. Having weathered so much risk in these times, they wanted to get back to what they knew was the old way of doing stuff, restarting in predictable ways. But the second group committed themselves to a harder path. These companies reorganized, and they recognized that there is no going back to any kind of a normalcy. Instead, they advanced into a new future, resisting the gravitational pull of their former state, and then capitalizing on the gains from testing and learning through all that was going on. They view their strategy, their customers, their operations through a very different lens. These companies are not simply navigating the restart, but they are positioning themselves for a world where things will continue to change. There will be regular turbulence, there will be regular shocks to the system, and therefore adaptation and resilience kind of become the most important things. Now, I want to speak about some truths about marketing, about after the pandemic. And I've divided these kind of into what was the old truth and what is kind of the new truth. Now, it is safe to say that 2020, 2021 were not really possibly the years which we would possibly ever see again. But as they say never, it could happen again. The first old truth I will speak about is marketing begins with knowing your customer was kind of the old truth. Now, the new truth is kind of marketing begins with knowing your right customer segment. Now, the pandemic has reinforced that brands must communicate in very local and precise terms, targeting specific consumers based upon their circumstances and what is kind of most relevant to them at this moment. So that means truly understanding the situation on the ground, country by country, state by state, zip code by zip code. So for some businesses, such as banks, restaurants, or some retailers, it may even mean tailoring communication, literally store by store. Now, beyond geography, we have learned that marketing messages need to be personally relevant and aligned to an individual's situation and values, as opposed to just demographics like old times like age, gender, and stuff. Now, creating a personal human connection within any commercial message requires defining these customer segments very clearly. And they have to be now defined according to multiple dimensions that influence their purchasing behavior and not just the old demographic standards. Now, utilizing customer segmentation and personas can actually bring deeper insights and strategies and creative marketing approaches. Better still, this actually helps you evolve over the entire customer journey. The other old truth was you are competing with your competitors. But currently, the new truth is you are competing with the last best experience your customer had. Now, consumer expectations were already on the rise before even the pandemic struck. Now, Gen Z, as we call them, grew up with technology seamlessly integrated into their lives. Now, direct-to-consumer companies, which are like your Hindustan Lever, Unilevers, were already conditioning us to expect a level of hyper-personalization, since they were particularly adept with using data. But when the pandemic hit, digital transformation literally accelerated overnight. This in turn sent consumer expectations skyrocketing in terms of what companies could do for them with a more digital experience. The customer expects so much more than just a seamless digital transaction. Now that companies have their personal data, they want anticipatory and personalized experiences across the entire customer journey. Companies have started following 3 strategies. They make brand scores now an extreme KPI for the full customer organization. They build the right data, they build the right technology foundation, and they align individual and collective goals across the customer journey. The old truth was customers hope you have what they want. The new truth is customers expect you to have exactly what they want. If the bar just keeps rising, brands must aspire to new values around customer experiences. And this is applicable in both B2B, business to business, and B2C, business to consumer context. Consumers today expect that any experience will be frictionless, it will be anticipatory, it will be relevant, and that they will be connected with the brand. In other words, they are concerned only with getting what they want and when they want it. And if they insist that nothing should get into their way. Now, creating these experiences requires that the companies place data and technology at the core of their organization. This likely means building some degree of machine learning, artificial intelligence. Why? Because data helps us create more relevant experiences across one or more dimensions of the 4 C's. Now, these 4 C's are about content that can be provided in experiences like emails or mobile apps, commerce, such as physical, or it could be e-commerce or a hybrid experience, community, such as actually convening B2B buyers at a virtual trade show or hosting a webinar on home repair for consumers, and convenience, like offering consumers coupons or benefits from a loyalty program. Today, now some of the As of yesterday, or as of the previous thinking, most of the 4 C's were kind of delivered in a one size fits everybody approach. But as consumers started demanding greater hyper personalization, companies will need to use more data and intelligence to sharpen their decision making and drive greater relevance in their ads through customer interactions to build confidence among these customers. One of the other older truths, courting customers is like dating. However, the new truth is courting customers is just like online dating. Now, for a long time, marketing was largely about buying mass reach or targeted reach at the best rates in media and hoping to convert it. So basically, it was like going to as many parties or bars or events as you could in the hope you could find that special someone. It was a world of spontaneity, serendipity, and frankly, a lot of face-to-face encounters. Enter online dating and swiping through apps. Now finding your perfect match may be less about chance and more about data and algorithm. In marketing terms, we have seen a shift from brand marketing to build reach to performance marketing to generate leads. Now, the pandemic's acceleration of digital channels only accelerated this whole trend. However, while performance marketing enjoys a very strong and important position in the mix, leading chief marketing officers recognize that it is kind of a fine balance of brand and performance that delivers the best results, and they must fight hard against a bias towards which is most easily quantified. Many are bringing their CRMs and teams closer to their media teams to see the full continuum. Now, that wouldn't happen before. The same data that can help to create efficiency in media, particularly digital media, and other addressable formats, allowing companies to target on a one-to-one basis. Now, there is a third-party data declining too. Now, that is also affecting too. The other old truth, customers must sit at the heart of your marketing strategy. Now, the customers must sit at the heart of your customer journey. The concept of customer centricity is not new. However, the functional silos which interact with customers are often disconnected because of politics, organization charts, technologies, or geography. The question is, how can we conceal these internal disconnects from the customer who assumes that the whole company knows them? I'm sure a lot of you would have called customer service and spoken to a call center representative or a chatbot that was not operating with the same information of a retail location and vice versa. The kind of conversations we have with these people at times can be extremely inflammable. We must remember that marketing is often just the beginning of a relationship with the customer. For example, in a B2C, a business to consumer content, we go through a journey of engaging them, converting them to a sale directly or indirectly, and then hopefully retaining them for some time. It is not realistic to actually expect that the whole organization would actually know all about you. But the notion that reorganization solves all problems is a common misconception. Now, the old truth of the matter was relationships matter. However, the new truth is relationships are everything. It is vital to build relationships with customers founded on trust. Advertising, for example, makes kind of a brand promise, and it then falls to the product, service, and customer experience to actually deliver on that promise. Now, COVID-19 pandemic has placed a new emphasis on relationships, particularly in B2B sales. Faced with a virtual sales environment, teams with existing relationships have been able to maintain revenue momentum, capitalizing on the strength of their prior bonds. In contrast, prospecting new customers requires an evolved set of skills focused on selling solutions and not products. In both cases, trust and integrity are fundamental for driving that marketing momentum. One of the other older truths, agility is a technology process. While in the modern context, agility is a modern marketing process. We have heard for years that technological development benefits from agile or speedy cycles of sequential or waterfall models. Now, the pandemic created an irreversible trend for marketing to embrace a simple and a nimble approach. As the crisis unfolded, a company could quickly find its message was wrong and its advertising was possibly wrong and had to be adapted, or new messages were to be created. Now imagine a commercial or an advertisement showing people clustered together, not demonstrating social distancing during those times. So suddenly that ad had to be changed. I do not know how many of you recollect, but KFC's slogan, finger licking good, they actually had to suspend that solution, that slogan, for a long period of time during the pandemic, because we were told to wash hands and be careful and all of that stuff. The fortunate outcome of the crisis was to create a mindset of marketing agility that is likely going to now be permanent. It includes continuous consumer listening and demand sensing too. One of the other things which stayed was your brand should stand behind great products, which was the old truth. However, the new truth is your brand should stand behind great values. The pandemic actually changed the whole brand loyalty concept. I have said to people time and again, it is no longer the age where brand loyalty as such exists. It is the brands that now need to be loyal to the customers and constantly start making things which would make customers stick to them. Quality, convenience, price are still very much important to consumer choice, but facts like sustainability, trust, ethical sourcing, social responsibility have also started becoming much, much more important. The other thing which was important is marketing is important for growth. However, marketing is now at the center of the growth agenda for the full C-suite, where I mean about CEOs, the CFOs, the CMOs, and so on and so forth. Where at a time when marketing was actually considered to be just a cost center by people, it has changed that completely. And now it is possibly an area where people want to invest in, and people are looking at returns on it. Now, as marketeers, we are charged with a continuous blend of art and science. We must achieve the perfect balance of humans and automation to unlock a future of better analytics and deployment of AI possibly at a scale. We need to use data to possibly fuel all this change. We must tread a fine line between brand marketing, performance marketing, recognizing that we currently have a sort of a bias towards what we can readily quantify. And we must understand what should be centralized and what should be bespoke, identifying where consistency may help and where it may not really help. And we must, at the end of it, prioritize the perspective of the customer now, next, and kind of beyond literally everything. So what do you think would be the future marketing trends that will define others? So these are the new paradigms in the new normal. AI, for example, artificial intelligence is rapidly becoming kind of a prominent feature in almost everything now. It's very popular in different parts of marketing. Not only is it useful in data analysis to spot trends and make predictions, but now it is being used in more creatively focused ways like copywriting, graphic design. I have no idea how many people have had a chance to use this new tool of ChatGPT by OpenAI. And I'll tell you, it will open you to a whole new world of possibilities. Yes, with possibilities comes several concerns too, but that is how new technology has always evolved. For marketeers today, there are numerous new tools to help marketeers write and design while only having to assist the AI through prompt creation. Though it's not advised to rely solely on AI for all your copy or design projects, they can act as a great starter or a great possibly to create those creative minds to get started and start. Now, the other thing which is possibly, we have to realize that AI as a technology is possibly young and maturing slowly. It is making large improvements in seemingly every single month. Now, this is the future where your teams need to become possibly proficient in using these AI tools and getting kind of accustomed to them. The other ones. sorry about that, user-generated content and other short-form models. Now, there is no more genuine piece of marketing than that is one which is done by your own customers. They act as your own brand ambassadors, brand loyalists. It could be your own employees who are showcasing about your product in a positive light. Whether it's pictures showcasing your latest product, sharing a joyful experience with your team, or other types of content. It's essentially free advertising of the most authentic variety. Now, why is user-generated content so important moving forward? Because of its authenticity. It stands out more than the standard ads or influencer promotions, especially because people are constantly bombarded with those type of ads. Because of this, instead, the user-generated content actually comes from real customers, real users, and it actually becomes something which is not fake, as they call it. Using technology to align marketing and sales. Now, aligning sales and marketing seems like a constant goal for any business, but that's for good reason. Aligning these two means that they exist in a symbiotic relationship where one feeds the other and vice versa. If they are not working together, then they are likely to become less effective. Organizations which have aligned sales and marketing teams typically would see an increase in the revenue. So what is the future? Why is this a future marketing trend? Why is it something that is a shifting paradigm? Because technology is continuously changing and is creating new ways for these two departments to work together. AI, internal communication, cloud technology, all of these enable strategic decisions to be taken for the organization. The other new paradigm, which is possible, is influencer marketing and kind of new uses of social media. Social media has been evolving. New platforms are coming into play. What started with Instagram, what started with Facebook has evolved into Snapchat, TikTok, and God knows what all. Newer platforms are taking over old platforms, and old platforms are reinventing what they are. One future marketing trend to watch for in social media is the continued rise of influencer marketing. As shopping goes more social, influencers become more and more valuable. They not only bring a highly dedicated fan base, but they also allow businesses to easily find niche audiences and advertise to them in a slightly more genuine way, if I can call it. Influencers are kind of entertainers at heart, and are getting your product into their hands is a good way to show it off without coming across as another ad. Now, this goes hand in hand with other social media trends that have seen more businesses turn to social platforms to do their selling. So whether it is Instagram, Facebook, Etsy, Twitter, and other platforms, they now have tools that allow you to sell directly on their app or to set up shop-focused pages to sell products. Now, what is making a comeback is experiential marketing. Now, the pandemic actually shut down any chance for brands to interact with customers live and in person, just as experiential marketing was kind of climbing into relevance. Now, this trend appears to be making a comeback and is likely to stay with us. As people are more and more likely to return to these type of events, technology again starts coming in here. The use of AR, that is augmented reality, and VR, which is virtual reality technology, and the increase of its availability to the public has seen businesses push for more into experiences. Personalization and conversational marketing. Now, 80% of your consumers usually are more likely to make a purchase from your business if offered a more personalized experience. The data will show what people want and react better to personalized marketing, which is why it becomes crucial. Whether it is adding names to emails or sending curated content or identifying specific pain points in the industry, showing that you have done your research and that you're willing to go that extra mile, as they call it, to connect with them, will help to put the brand firmly at the top of a consumer's mind when purchasing decisions are actually made. In the future, from say 2023 and onwards, increased amounts of data collection allows businesses to actually know more about their audiences than ever before. And we have to make sure that all of these are used properly. Voice optimized search. Now, just like how businesses have optimized SEO, search engine optimization for mobile searching, in future, people will have to do the same for voice search as more people turn to Alexa, Siri, and others to do their searching for them. Now, 20% of today's searches are currently done via voice search. And that number is literally climbing every single day as more and more homes have smart speakers and other devices which are capable of web searching. This is becoming also prevalent on YouTube, where people can now use their voice-capable remotes while lying on the couch rather than typing the whole thing with their fingers. Shorter key phrases, adjusted phrasing, building brand voice skills, all these things will slowly start falling in place. The most intriguing one, which intrigues me, is the metaverse. This often discussed metaverse seems like a constant looming challenge for marketeers. For a while, it seemed very far off because of the cost involved. But now, as good VR goggles and technology catches up, the metaverse seems nearer. 2023 and beyond, it will be worth seeing how brand can utilize these digital spaces to actually leverage marketing. Some things which we have already seen are digital clothing, branded spaces, metaverse experience for experiencing how shopping could look like. This technology is just about blossoming. And so its true uses, which again have been accelerated by the pandemic, will start to be seen in marketing too. The other thing is interactive content. Now, marketeers agree that interactive content has a lot of positive effects on marketing materials. So whether it is higher engagement rates, brand loyalty, or a better learning experience, all these interactive marketing content is going to help you in the new marketing world. The virtual reality and augmented reality. Now, they were kind of away from us for a long time because of the costs which were associated with it. Now, this technology has been evolving for a while. It has reached a point of mass acceptance, creating those simulated experiences that consumers can have in their own homes, sitting at home or at an event, is a chance to actually unload your team's creativity, because in the metaverse, literally anything is possible. At the base of all this is privacy concerns. Marketers everywhere know that we are using more data than ever before. But sometimes it is very, very easy to forget that to get that data, people have to give it up willingly. The human element of data collection is not something that should be ever forgotten. As privacy becomes more of a hot button issue with users, businesses have to make sure that their data collection strategies are extremely robust and make them clear to the audiences. A poor privacy and data policy or mishandling of data can severely impact the trust for a brand. And a bad privacy experience is enough to make people switch brands completely. It has been an absolute stunning time of evolution, which the pandemic accelerated for marketing too. The next century or so, there could be another crisis. There could be a next crisis. It will take us into directions that nobody can fully comprehend right now. One thing, however, is completely certain, that the fittest will survive. There are two quotes which I am particularly fond of, which I'm going to leave you with. David Beebe, founder and CEO of Storyfied Brands, actually said that content marketing is like a first date. If you go on talking about yourself, there won't be a second one. Now, I have removed the word content here because I think marketing is like it completely. You need to have a two-way conversation. The conversation needs to be engaging. It needs to go back and forth. You need to keep understanding what your consumer wants, what your end consumer wants, what different stakeholders want. And until and unless you do that, your organization is bound to fail. And Socrates, who said the secret of change is to focus all of your energy is not on fighting the old, but on building the new. So use every opportunity, whether it is a pandemic, whether it is another crisis, whether it is any kind of other stuff that happens with you, use it. Do not just fight the old, but build something new, create something new. And that is where marketing is likely to take you to. So that's all from my end, and I'm open to questions from your end, please.
Thank you, sir. It was a really enriching session which told us about the evolution of marketing and how the conventional marketing has invalidated itself and it has metamorphosized itself into the modern techniques. And you explained it really uncomplicating it and clarifying it much further. However, for the question and answer session, I would request co-convener Rakhi Madam to take over. Before that, a request to all the participants. There's a feedback link which is posted in the YouTube live session also in the chat box as well as in the WhatsApp also. Please do fill the feedback forms. Thank you so much. Over to you, Rakhi ma'am.
Good afternoon, everyone. Thank you, Rashmi ma'am. Now we begin with third Q&A round. Participants have typed their questions in the chat box. The first question the participant wants to ask is, what is the one major shift or change in a marketing practices post-pandemic?
Wow, I think that's a kind of to identify just one thing is a bit of a challenge itself. But yes, I think what I see as most of the major change, or rather a major change that has happened, is agile customer personalization. So what a customer needs, can you give it to that customer, to her or him or they, right now, without having to go back and forth in a lot of ways? Are you speedy? Are you completely, are your systems completely ready to give that consumer what that consumer wants right now, or without too much of a delay? Traditionally, brands were used to waiting and coming back and collating all the responses, trying to find out if anything would do, but that would take years. But now the customer or the consumer wants it right now. Now, that's one of the major changes that has happened post-pandemic. The kind of things which companies are doing has become much more faster. They are personalizing things for people much more faster. And that's kind of changed the way marketing totally evolves nowadays.
Thank you, sir. We have a next question. Is customer education the new form of marketing?
It's a very interesting question. And I've tried to tell this to some people when we spoke about what does a customer really mean to people nowadays. So more than education, I think customer partnership has become the key nowadays. So rather than just educating a customer as to what your product is or what your product could do for them, it is more about asking the customer, okay, is there something which you need from me? Is there something which I can satisfy? And hence you enter into a partnership with that person. It's literally like human partnerships, where you want to know about the person before you kind of finally find out, can you be friends? Can you be partners? Can you have a long-term relationship? All that stuff. It's literally like a proper human relationship, which is more and more important rather than just educating the person and making those things happen.
Thank you, sir. The third question is, are oversized marketing campaigns justified in the new normal?
Tricky question, because in most of the cases, I would possibly say no, but there would be exceptions. Now, the reason I say no is because now you do not need to spend that kind of money to reach your target audience. So you can actually customize a lot of things. However, there will be cases in which you need to make a much larger point. Let's take the case in point of the current women's IPL, which has started. Now that needed oversized marketing. It needed to be on TV, it needed to be on print, it needed to be on billboards, it needed to be on social media, it needed to be everywhere. Because it's just not about the game, it's about the whole thing about how women are equally good at that sport. And emphasizing that again and again and making sure that the message reaches absolutely every strata of the society, which is where oversized marketing kind of helps. But it will not really make a difference when it is specific niche products. So yeah, it's going to be a mix at times, but there will be cases when it will be needed.
Thank you, sir. Let's take the last question for this session. Can companies just rely on the digital marketing post-pandemic?
I would say this would largely be governed by what business or what sub-segment of a business they operate in. For some of the businesses, digital marketing may be the only way of marketing. They may not really need to do anything else at all. But there will be some businesses for sure who will need to be physically marketing themselves by traditional means too. The traditional means may also evolve over a period of time, but one cannot let go of those methods at all. Possibly 100 years down the line, somebody will look back and say, no, what you said was totally false. Things have evolved. But at this moment of time, as I look at it, it seems as if you'll need a mix of both. Yes, the digital part of it is slowly increasing in proportion, but it may not completely replace what traditional marketing does.
Thank you, Amit Sangekar, sir, for giving your valuable time and sharing the expertise. You highlighted rightly that the marketing has evolved as a conversation, and that ads need to reach the right kind of consumers. Sir, you also spoke about the significance of artificial intelligence and the chatbots in creating profitable relationship with the customers. Relations are everything, and agility is the modern marketing approach. What you said that it is not the brand loyalty of the customers, but the brands now need to be loyal. Customer is a new paradigm. Your insights and expertise on the topic were invaluable, and we all learned a great deal from your session. Now I request our Vice Principal and IQAC Coordinator, Srimati Chandana Chakravarti, to propose formal vote of thanks. Over to you, ma'am.
Thank you, Rakhi. Warm good afternoon to all present here. It is indeed an honor and my pleasure to confer the vote of thanks today on behalf of Parle Tilak Vidyalaya Association's M.L.Dahanukar College of Commerce, and on my behalf, I would like to propose a warm vote of thanks, which is actually just a formality because everybody has been is aware that a lot of hard work has gone into this conference. I would like to first thank our speakers for the day, beginning with Mayuresh Dharak, who was our keynote speaker, and he gave an insight on the impact of COVID-19 on life insurance, health insurance, and he spoke about the 5R model to deal with the new normal, that is resolution, resilience, return, reimagination, and reform. He also gave an introduction on wellness products and rise in new digital channels, and explained the concept of insurance technology, which is a smart combination of insurance and technology. Finally, he also spoke about the new product designs developed by IRDA, sandbox platforms, motor insurance, and water policy for motor vehicles. He has highlighted the abundant scope for increasing the protection gap in countries like India, and also very important for our students, he has also given an insight into the upcoming careers in insurance sector. Our second speaker, Dr. Alvini Santiago, she spoke about a shift from the green HRM to nature-based solutions and focused on CSR practices of top companies like Brambles Limited, Australia, and Indian companies like Reliance Limited, HDFC, TCS, ONGC, etc., who have shifted from HRM to NBS. She gave the case study of Natura Brazil and their green practices and the strong network building practices, which could help us to meet the challenges posed by the new normal. And finally, she also gave us some idea on how to mitigate and adapt to climate protection and ensuring human well-being, which will help us to achieve the new agenda for 2030. The third speaker, Mr. Amit Sangekar, He has spoken on the evolving marketing paradigms for the new normal, the visual evolution of marketing from production era to sales era to the relationship era and now to the marketing era. We are extremely thankful to all our speakers for the day. It has been an entirely enlightening session, an intellectually stimulating session for all of us. Thank you for being present here. I would also like to thank our governing body of Parle Tilak Vidyalaya Association, who has been a constant source of inspiration for all of us to go ahead in the field of research. And this conference was possible only because of their support to us. I also want to thank the entire team of organizers who have worked tirelessly for so many days to make this conference happen. To begin with, the convener of this conference, Dr. Mitali Shelankar, the co-conveners, Mrs. Rohini Madoi, Mrs. Rashmi Bendre, Mrs. Priya Tiwari, Mrs. Delisha D'Souza, Mrs. Rakhi Pitkar, and our technical team, without which this conference again wouldn't have been possible, Mrs. Archana Tarekar and CS Swapnil Shenvi. Last but not the least, I'm thankful to all the participants today who have joined us for this conference, paper presenters and researchers who have submitted their papers for publication. Your contribution is invaluable. Thank you to all of you. Thank you.
Thank you, Chandana ma'am. We now formally declare the closure of session 1. All the participants are requested to stay tuned. Track link is posted on the WhatsApp group. All the participants are requested to join the link by sharp 1:30 p.m. Thank you.
Hello.